This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Why are we upset if we're creating jobs?
Inflation's still a thing out there for the everyday consumer.
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Tensions between the U.S. and China have heated up even more.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene and Paul Sweeney. Is Michael Barr here?
I see
Michael
him
Barr is here. Lisa Mateo as well.
course.
We are all here on this Friday across America as we celebrated Independence Day. I can tell you that the fireworks and all in Central Park, they went on until 3:16 a.m.
Very good.
Is what we would say. We're here, and the news flow is extraordinary. Usually on a jobs day, Paul, the whisper number is just about the jobs report.
Yep.
The whisper number for the jobs report, Mike McKee tells me, is 185,000.
Okay, very good. All right.
The whisper number for the conservatives in the United Kingdom is they lost 251 seats.
Boy. Yeah, what a move there in the UK elections there. So we're getting movement. It's amazing how quickly it happens. I mean, the PM resigns, the new PM goes to see the king, then comes to 10 Downing Street. It happens like in just hours. It's amazing.
We're going to go to Tom McKenzie here in a moment at Downing Street with Sir Keir over, I believe, at Buckingham Palace, seeing the King of England. It is tradition, it is a pageantry.
Yep.
And what I saw from the outgoing Chancellor of the Exchequer, who actually won his seat, he wrote a beautiful note to his kids and said, this is what democracy is about.
Right, exactly.
That was with my tweet of the day,
Yep.
without question. My other tweet of the day here to get you started on YouTube, search and subscribe on Bloomberg Podcasts, on Apple CarPlay, Good Morning in the United Kingdom, and on Android Auto as well. It's a miracle. Lisa Mateo is here.
She's here, looking fit and fiddle.
From the Interactive Broker Studios with our Bloomberg report, Lisa Mateo.
You got it. Yeah, back to trading on Wall Street after the 4th of July holiday. And we're kicking it off with a bang with the June jobs report. Ahead of it at 8:30 Wall Street time right now. NASDAQ futures up about 0.1%, 30 points. Dow futures little changed, up about 3 points. S&P futures little changed, up about a point. We head to the 2-year yield, 4.68%. That's down 2 basis points. The yield on the 10-year, 4.33%. That's down 2 basis points. I have to point out currencies because of everything going on in the world politically. We have the pound right now, 1.2787 against a dollar. Its longest winning streak in 4 years. This is as the Labor Party swept to power. European stocks rose for a third day. We have the stock 600 up 0.3%. You also have the CAC in Paris. A second round of elections taking place this weekend. Right now, that's up about 0.3%. We go to company news. America's two largest high-end department store chains becoming one. Saks Fifth Avenue parent company HBC, Hudson's Bay Company, agreed to buy Neiman's Marcus Group for $2.65 billion. You have Amazon, Salesforce help facilitating that deal. And then Macy's up more than 3%. The Wall Street Journal reported Arc House Management, Brigade Capital Management have raised their buyout offer to about $6.9 billion. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, thank you so much. Our front and line story today is this incredible jobs report we're going to see at 8:30. We've got a great group of people lined up. Lindsay Piegza, Ann Sonders, right around the report.
Wow.
Really appreciate our guests stepping up on this Friday of the victory of the colonies over the mother country. Joining us now from the mother country at 10 Downing Street at this moment of incredible history is our Tom McKenzie. Tom, for our American audience, and good morning, Sir Keir Starmer is now seeing the King of England. What happens next? Does he come over to 10 Downing Street? And am I correct, as Paul mentioned, that they get to work right away?
Tom, you pretty much nailed it, hit it on the head. The incoming Prime Minister, Keir Starmer, Sir Keir Starmer, as you rightly say, is currently at the palace, meeting with the King. That's after the outgoing Prime Minister, Rishi Sunak, of course, went to the palace himself to tender his resignation. We are expecting Britain's next Prime Minister to be arriving here at 10 Downing Street in about 20 minutes' time. He will give a speech. And you're right, this is a very, very quick...
Okay, He just dropped. Okay. That's what we have. For those of you on Bloomberg 1130 and on Apple CarPlay and all, is an assembled crowd, I assume, of Labor.
And guess what, Tom? It's raining.
Supporters. Well, it's raining. That's,
Yes.
Francine Lacroix cued the rain last night. But we'll try to get Tom McKenzie back. See what you can do, Bob, to get Mr. McKenzie back. To put perspective on this, and I spent a lot of time on this yesterday, thinking of my family who understood it was a huge deal. Labor didn't win. The Conservatives lost. Yeah. With the overwhelming tone to that. This is John Curtis, who is the Dean of United Kingdom Analysis, and it was a split vote between coming on Nigel Farage, who took over, finally got a job as an MP after the 8th try, and of course the Conservatives beleaguered. I believe we have Tom McKenzie back right now. Tom, the Chancellor of the Exchequer is from outside Leeds. So Sir Starmer and his cabinet will get right away to work. What is their first order of business?
That's right. The Shadow Chancellor, Rachel Reeves, will be coming into office, of course, the incoming Shadow Chancellor, I should say, within the next few hours. And as one senior bank executive told me here, this is the opinion of just one person, but a very senior banking executive, for this senior executive, they're essentially interchangeable. The current Chancellor, the outgoing Chancellor, Jeremy Hunt, and Rachel Reeves. That's the view. And that talks to some of the comfort level that you're seeing in the markets around this incoming Chancellor. But yes, they will get to work straight away. On the diplomatic front, that starts very quickly for Sir Keir Starmer, our new Prime Minister. He will be going to Washington to attend that NATO summit. There will also be meetings in the middle of July with EU leaders here in the UK. Importantly, this is a Labour Party that is committed to getting a closer relationship, an improved deal with the European Union. They've so far ruled out access to the single market and the customs union, but they want a closer deal. That could also be positive for growth. Right. Many people will be hoping that that is the case. It's the first 100 days where they are going to be putting the metal really to the wheel to the metal, and hoping to push through some of these achievements, policies, particularly around planning for housing and things like data centres.
And of course, the roar that you heard from the crowd, roar in Basel in the United Kingdom, was not for Tom McKenzie. It was for Lawrence the Cat, just walked by.
Very nice.
Larry the Cat just made an appearance here before Sir Keir. Paul, to Tom McKenzie, please.
Hey, Tom. Tom Keene was just pointing out that it wasn't so much that Labour won this election, but that the Conservatives lost. What does it say about the sense of the English people here, about how they view their government and their place within Europe?
Yeah, and this is a really important point, because if you just take the top line, then it looks like, of course, you do have this landslide for the Labour Party. But you lift the lid a little bit and you see just how fractured the politics of the UK is right now, with the gains coming through for the Reform Party. And don't forget, in our first past the post system versus proportional representation, they get a significant number of the popular vote, but they don't translate that into numbers of MPs. Farage getting his 8th time around. But Reform got a significant slice of that popular vote. Labour Party just got 34%. The Labour Party got 34% of the total vote. You've got a big gain coming through Reform, big gains for the Liberal Democrats who want an even closer relationship with the EU. They're now the third main party and a key opposition party as well. And the Greens also picking up a decent slice of the voting tally, although they only have a couple of MPs to their name. This is a fractured and rewired political reality here in the UK.
Right, but Tom, one more question here. I know you've got to go interview Larry the Cat. Tom, for our American audience, we don't understand the parliamentary system. Even though there's all this analysis and the Conservatives lost, the fact is Labor has a substantial majority, and to use the American language, they can ram through their legislative process, right?
That is correct. They have fewer checks on power than they do in the US. Keir Starmer will have significant power, does have significant power right now with this majority of 412. So the risks then for some looking at this agenda, and you heard that voiced by the Conservative Party all the way up to last night, was unchecked power for this Labour Party in terms of how they push through this policy agenda. Labour would come back and say, we've been very clear, growth is key for us, and we will stick within the fiscal constraints. The Office of Budget Responsibility will not be lax when it comes to fiscal spending. That would be concern for some, in the market. So far, of course, the market's relatively relaxed about what we're seeing. We have a massive productivity problem, a massive lack of investment, the lowest investment amongst the OECD, productivity about 0.6%, and close to 3 million people who are economically inactive.
Tom McKenzie from 10 Downing Street, thank you so much. We go near Mansion House to Queen Victoria Street. And Derek Halpenny, we don't have him, I'm sorry. Okay, we had some issue there with the technology. We are back in our studios. Yep. Lisa Mateo here, Michael Barr, and we welcome you on this odd Friday of the 4th of July. It was a pretty easy commute coming in. How about that New Jersey commute today?
No problem at all. Nobody on the roads this morning at 4 in the morning. I'm looking at pound sterling here, Tom, getting a little bit of a lift here, about 0.2%, one spot, 2.788 on pound sterling.
Sterling lifted here. I would say there's not all that much movement within the markets this morning. And why is that? Because people are really focused on the American labor economy. We're going to see that report. Now, it's come in the last number of days. I believe it was over 200,000 even a week or so, 10 days ago. And we come in and Michael McKee's saying a whisper number even lower of 185,000. Right now, quickly, we're going to go to Derek Halpenny at Queen Victoria Street. Derek, how will you, as a foreign exchange guy, monitor the first hours and days of labor?
Well, you know, obviously the actual result itself was very, very close to a lot of the polls that were coming in. So I think that explains this lack of initial response. I heard you speaking there a moment ago about what the kind of get to work program is going to be. The King's speech is on the 17th of July, so that will be the first sense of the legislative program, which of course we know a little bit about already. But you know, the manifesto was extremely cautious in terms of fiscal policy, and we won't really know until the first budget from Rachel Reeves, which could come just before the Labour Party conference, which is on the 22nd of September, or it might come after the Tory conference at the beginning of October. And really until then, in terms of the details of fiscal expenditure and tax, there's not a lot to go on. But what I would say is this very, very significant majority, while it does mask some of the maybe lack of enthusiasm for Labour, it is still a very significant majority. And with that comes political stability, and in my opinion, a positive growth premium will come with that.
So, Derek, as you mentioned, stability seems to be kind of one of the watchwords for this election here, the expectation for greater stability. How do you expect this government to try to position itself vis-a-vis the European Union?
Well, you know, clearly we now have a government that is far, far more pro-European, and of course with the Lib Dems doing well as well. But of course, they are very constrained, and there are red lines that Labour won't cross. I think certainly not in this Parliament. So in that sense, it's relatively restricted, unless on some of the regulatory aspects of, for example, food labelling or services exports for artists and entertainers, for example, areas where there might be some give. There could be an element of having to follow rules going forward. So in other words, giving up a little bit of control. So whether Labour will be willing to do that at the very beginning, I'm not so sure, but clearly gradually going forward, if this government is successful, if growth picks up, they're in a better position to take some of the bolder steps that today don't look like they're very feasible, because Brexit's the big word that nobody wants to mention.
Well, to Paul's point there, and I was thunderstruck watching the networks last night, I know, Derek, as you did as well, there were two unmentionables. One was Brexit, and the other was immigration, migration. Did you find that odd?
Yes and no. Well, I guess, you know, Reform UK was very happy to talk about immigration, and of course they won 14.3% of the vote. So there will be pressure on the Tories to shift right, probably, because, you know, even though some of the well-known pro-Brexit right-leaning candidates or members of Parliament lost their seats, the share of vote for reform means certainly from an opposition perspective,
Right.
immigration will still remain a significant topic, and Labour will be under pressure to ensure that doesn't deteriorate.
I look. Should we talk to Derek about the markets?
Sure, absolutely.
Derek, what does sterling do?
Yeah, exactly.
Well, we've just raised our forecasts for sterling. Now, it wasn't all on the election and what we saw was coming. It's also, I think Labour is coming into government at a very good time. We now have positive real income growth. We've had a strong start to the year in terms of a much stronger quarter-on-quarter growth rate. The prospects look good. Business confidence, consumer confidence are rising. And I think with the inflation shock mostly now behind us, the prospects look good. And as I mentioned, that positive growth premium from the political stability should help business investment, which, by the way, is picking up because of the 100% expensing, which is now permanently in place. So the backdrop is certainly more favourable. And I think, possibly the OBR, possibly the Bank of England are being a bit too pessimistic in terms of growth over the next 12 to 18 months.
Very
so
valuable.
That's all good for sterling.
Derek Halpenny, thank you so much. With HSBC, really can't say enough about his work today. Just so much going on here. We're going to come back. Terry Haines scheduled to be with us. There's a little bit of an uproar in Washington over the weekend, and it wasn't the Washington Nationals middle relief. Right now, from our interactive broker studios with the Bloomberg Business Flash, Lisa Mateo.
You got it. We have little movement in futures ahead of Jobs Day. The quick breakdown, the report expected to show hiring slowed down last month with the headline number seen rising 190,000. That's versus a 272,000 gain over in May. Ahead of it, we had more Fed speak. The Fed's John Williams called inflation work significant, but said the job is not done yet. Right now, NASDAQ futures up 0.1%, 33 points. Dow futures little change, down 10 points. S&P futures little change, up about a point. We have the 2-year yield 4.69%, down 2 basis points. The yield on the 10-year 4.33%, and that's down 2 basis points. Bitcoin, have to point it out, sinking for a 4th session in a row, the lowest since February. Right now down 5%, around 55,000, and that's drawing other crypto-linked stocks. We have Coinbase down more than 5%, same for Marathon Digital. And finally, company news. The head of America's biggest retail bank, well, it says its customers could soon be paying for their bank accounts. The Wall Street Journal reports Marion Lake, who runs Chase Bank, says that those new rules that would cap overdraft fees and late fees, that could push the firm to charge customers for a number of now free services, including, yes, checking accounts. That is your Bloomberg Business Flash. Tom and Paul.
Lisa Mateo, thank you so much. Paul Sweeney and Tom Keene here. We're an hour and 10 minutes away from this important jobs report. Lots of other action in economics, finance, investment, and politics, a French election on Sunday, and also a U.S. election in November. Terry Haines joins us now to pick up the pieces and piece together, I guess, the second week of July in Washington. I don't know if he's capable of doing that. Terry Haines with Pangaea joins us. Terry, right now, after the bizarreness of this weekend, the uniqueness in American history, what is the Terry Haines unknown?
Well, very simply, it's whether Biden's up to the job or not, and whether he can prove it or not. I mean, we've been, as citizens, have been misinformed about the president's condition, to put it kindly, and much of the news media, not this network, but much of the news media has willfully ignored it. Now they're overcompensating. The question is whether he's up to it or not. I mean, I wouldn't put a lot of money on it in Vegas, but at the same time,
right.
You've had situations where he's gone out in public a few times and shown fire and shown the ability to talk. And he's got Stephanopoulos coming up tonight, and that's going to be a huge moment for the campaign.
And we'll have to see that. Bloomberg, of course, will be synthesizing the questions, edited and unedited, at ABC. Terry, excuse me. Choking on a 5th hot dog. I didn't do Nathan's, but I got up to 5 hot dogs. What can I say?
That was enough.
Terry Haines, what is the probability, the likelihood, the ability of the Democratic Party to squeeze into X number of weeks a diverse campaign process of 4, 5, 6, 7 candidates to get to a smoke-filled convention?
Oh, by which you mean replace Biden? Is that where we're going?
Yeah, well, replace Biden,
Okay.
but to go
Okay.
beyond just the idea the vice president will take over.
Yeah, well, it depends on whether we're talking about him leaving the presidency or leaving the his candidacy or both. And that's a little more finely judged than
Right.
I think he probably wanted. But the answer is, they can absolutely get a situation where this virtual nomination process they're going to try to pull in a couple of weeks, might get short-circuited by a number of the delegates themselves who may well insist on a rewriting of the rules. There's an awful lot of dissatisfaction out there, but there's not a lot of ability by those who are most dissatisfied with being able to do something about it. This is still pretty tightly controlled, and I think Biden's trying to brazen it out right now.
So, Terry, obviously, it's really up to President Biden where this whole thing goes here. What's your sense of timing? When do you think the president really has to make a decision of whether he is in it or not?
Probably between now, almost certainly, Paul, between now and the convention in mid-August. But then there's this tripwire where the virtual convention happens in sometime in mid-July, late July. So, what they're trying to do right now is kind of wrap up the party regulars, make it all but impossible for the convention itself to remove him, which makes it even more in his judgment about whether he wants to continue or not.
And Terry, I guess the question for a lot of folks within the Democratic Party is, if he were to say, I'm going to step aside for this next election, is there any sense of what the process might be? Would there be a series of debates among party leaders? Would it just be handed to Vice President Harris? How would it work out, do you think?
Well, I think there's a group that wants it handed to Harris. But Biden, of course, is using Harris, I think, as a backstop for his own ambitions to stay. I think what ends up happening is you have a change to the party rules that releases delegates from their first ballot commitment to Biden, and you actually have, as we had before 1972, actually have an open convention where the delegates actually get to decide who they want. And in that situation, you'd have nominations by different people, you'd have
Right.
speeches, you'd have unruliness galore, just like you used to have in American politics.
This is, obviously, the media, that's exciting. We're talking our book, which is We Want a Crazy Convention. But Terry Haines, I want you to take us right now to 430 South Capitol Street Southeast, Washington, D.C., to the headquarters of the Democratic National Party, I guess. Jamie Harrison, Chris Cork, Jason Ray, and others. Does the president routinely, any Democratic president, do they just control the DNC? Or does the DNC have a vote to get to that convention we all want?
They control the DNC, particularly in the months and year leading up to the election. That's been standard in both parties for quite a while. And when you combine that with the fact that the parties, as party organizations, have been atrophying over the past several decades. It's interesting to talk about it today because I'm sitting in London. You've just had conversations about the UK elections. The party organizations are very strong in the UK, whereas they're very weak in the United States, and nowhere weaker or nowhen weaker than the year of a presidential election.
So
Jamie Harrison's taking orders from the White House.
To sum this up, to Paul's good question, the president of the United States really is going to decide the process of his future and his party's future in the coming days and weeks, maybe to get to a Donnybrook that gets us to Chicago. Is that right?
Yeah, I think so. They've exercised huge control over this process from day one. Basically making it a primary free process. exercising a grip on the party controls, exercising a grip on the money, as people are now starting to figure out. The money gets the Biden-Harris money gets dispersed away unless it's anybody but Biden or Harris at the top of the ticket. So there's a lot of considerations mechanical for Democrats to go through, much less the fundamental question of whether Biden ought to be their nominee and whether he ought to remain as president.
Terry Haines, thank you so much with Pangaea. Thrilled to have him from England today, from London, on all that's going on in Washington. Out on YouTube live chat.
All right.
I mean, Lisa, help me here. Good morning from Acapulco, Mexico.
Oh, there we go.
Really, muy bien.
That's early morning, isn't it? That's the west side.
Acapulco?
They're looking out to China,
hurricane, I think, right? That's all.
They're on the other side of the
Mexico.
hurricane.
Okay.
I think by them it's a bad rainstorm. Good morning on YouTube. We're out on YouTube. Search and subscribe, Bloomberg Podcasts. Building every day. They showed me the June numbers. I had to go in a hermetically sealed room
Okay.
to see the June numbers. And Lisa's putting us over the top.
I know. With the
We're not doing,
newspapers.
the news flow's so great on this Jobs Day, there will be no newspaper
Oh,
report.
no, that's that crushing blow.
Mateo tried to not come in, but they said, no, you still got to come in and do with the magic that she does. But we are going to get to the jobs report. Paul, an hour and 5 minutes away.
Yeah, absolutely. So this is this is one of the key data points for the Federal Reserve as they think about where the labor market is. And again, just that unemployment rate, if you're looking for a headline number, 4%, and that would be in line with the last month's number. So we'll keep an eye on that. Again, 190,000 jobs is the consensus, Tom.
From New York City, this is Jobs Day. Stay with us on YouTube, Apple CarPlay, Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
The Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures pretty much treading water. This is ahead of key jobs data expected to show some moderation in hiring. Right now, NASDAQ futures up 0.1%, 32 points. S&P futures, little change, up 2 points. Dow futures, little change, down about 16 points. The 2-year yield, 4.68%, down 2 basis points. The yield on the 10-year, 4.33%, down 2 basis points. We have spot gold higher, 2,365 an ounce. Brent crude, $87 a barrel. WTI crude, $83 a barrel. To company news, Samsung posted its fastest pace of sales and profit growth in years. Then you have Foxconn, which manufactures iPhones for Apple. June quarter sales of about $48 billion. That beat estimates, and that was thanks in part to its growing AI server business. And Tesla shares on the rise, up more than 1%, putting the stock on track to turn positive for 2024. Its longest winning streak in more than a year, added about $200 billion in market value. And hand in hand with that, this headline just coming across: Turkey set for a $1 billion EV plant deal with China's BYD. That is your Bloomberg Business Flash. Tom and Paul.
To make electric vehicles, maybe. Lisa Mateo,
go.
thanks so much. We're waiting in London with Labour supporters on the curbs of the London streets as Sir Keir Starmer makes the trek from Buckingham Palace across to 10 Downing Street. Larry the Cat and the podium await. Our Tom McKenzie is there, and we will go to the comments of Sir Keir.
The rain is
as
stopped,
he
Tom.
arrives. We'll describe that. We'll interrupt Priya Misra as best we can, and we are thrilled she's joined us in the studio today with J.P. Morgan. Is your path for the 10-year yield off of this jobs day?
Yeah.
Is it towards a lower 10-year yield?
I mean, we're sitting here, the 10-year Treasury right now, 4.33% off 2 basis points here, but let's check in with somebody who actually is a professional and not just playing here. Priya Misra, Portfolio Manager, Core Plus Bond Fund at JP Morgan Asset Management. So Priya, what are you going to be looking for in this jobs report here today? And more importantly, how do you think the Fed's going to be looking at this jobs report?
So I'm absolutely focused, as I should be, as a market professional, on the jobs report, and I think the Fed is as well. I actually think for the first time in 3 years, the Fed is as focused on the jobs market as they are on inflation.
Okay.
Now, in terms of what we're looking for, there's no question the economy is slowing. I think the question we're all facing is, are we slowing to trend or are we slowing below trend? The labor market, historically, when it starts to slow, it often accelerates. It's a non-linear increase in the unemployment rate. We're not there yet. And in our view, we're hopeful that the soft landing can continue, that we're just normalizing to trend. Which is why I'm positioned for a soft landing to continue. But here's what would make me really nervous. If you get a slowing of, in terms of non-farm payrolls, even around 150,000 or less than that would be a concern, right? Because I think that break-even is closer to 200 given labor supply.
But to Paul's question, is the market priced in for the vector that your David Kelly established 18 months ago? Or will the market be surprised by a whisper number of 185 or something lower?
I think 185 is priced in. Something 150 to 200 is priced in. I actually think anything below 150 is not priced into any market. Or a rise in the unemployment rate above, let's say 4.1, 4.2, that is not priced in. We are all every market is priced for a soft landing. If you get a weakening in the labor market that is more than this, so 100,000 or below 100,000 number, I think then that recession probability or that tail risk to the soft landing, that things are slowing down faster. And the Fed can absolutely cut a lot more, and I think they will. But will that be enough to prevent the economy from going into a recession? I think that's what the market will start to grapple with.
If we are in for a soft landing, which I believe, which doesn't mean anything, do I take some credit risk here? Or do I just sit in my 2-year Treasury and clip coupons?
No, I think in high quality spread product, I do think you take some credit risk. But a couple of points on that. I think you have to do your credit work. Dispersion within credit.
I went to the Chase Manhattan Bank credit training class back in 1991. I can do credit work.
That's good. So what are companies doing with their money? What's the balance sheet? What are how much EBITDA growth is happening? So we're doing a lot of that. We have a huge research team that'll work with portfolio managers to make sure we know the companies we are buying or we're giving money to. Ultimately, you're lending money if you're buying a bond.
Right.
And so I think doing that credit work to make sure you're buying solid companies does make sense. And then I would say now owning some, you talk about 2-year treasuries, I would say 5-year or 10-year treasuries.
Okay.
Take some duration risk. What we saw in 2022 where every asset class underperformed, well, if things slow down more, I actually think longer term treasuries will hedge that risk that you're taking in.
Priya Misra was with us here on Jobs Day as we look at the fixed income ramifications. She, of course, holds court at J.P. Morgan. We're waiting at 10 Downing Street with our Tom McKenzie for an appearance by a new Prime Minister, Sir Keir Starmer. He has just been at the White House. Asquith,
Buckingham Palace.
excuse me, not the Buckingham Palace, brain freeze there. Well, come on. I had 5 hot dogs yesterday, leave me alone. But Asquith in like 1911-ish or 1908 had the kissing of hands to go see the king, and the king was away in France on holiday. So he had to go to France, literally to see the king before taking over Prime Minister. Sir Keir Starmer doesn't have that luxury today. Priya, in the time we've got left with you, I think there's so many people that have missed this great equity market. They're in coupon or they're in something away from the Magnificent Seven. How synthesize all of the plan you've seen at J.P. Morgan for people that have missed NVIDIA? How do they participate? How do they catch up?
I think you're supposed to think about risk reward across your portfolio. And if you've missed these, I think you look at what's underperformed, make sure you look at the companies buying some, again, I'm a bond portfolio manager, I'll talk about bonds, but I'll tell you there's 6 trillion sitting in money market funds.
And you're saying extend duration now. I mean, the heart of the matter is you're telling Paul Sweeney, fat as a cat and a 5% 2-year, whatever, to extend duration.
Yeah, 5% seemed great when the Fed was hiking or there was a risk of another hike. I think that risk has been taken off. The Fed's telling you they're about to start to cut rates. So extend duration, you've got time, over the next few months as the market starts to price in the Fed start to extend duration.
Priya, I'm looking at the INGO function on the Bloomberg terminal, and a U.S. fixed income, the only green I see is 2.62% for U.S. corporate high yield. How did that happen? And am I still playing the high yield space?
I think you are. I think carefully. The high yield space is extremely bifurcated. You've got this single B, double B sector that's tight, but for good reason. Those companies are extremely solid. I think they've been reinsured effectively by private credit. And then you've got the distressed triple C, double C, that sector, which is extremely wide. So I think you have to be careful. You know what you're buying in high yield. But high yield is giving you spread. And the reason you're not seeing that positive total return is we had a first quarter with very strong inflation data, which the Fed said was bumpy. Now it's turning out the Fed was right. It was bumpy. Inflation's coming back down. It's been a tough year because we had that first quarter strength in inflation, which derailed the Fed's plan to cut rates. But I think it's back on.
Can this jobs report adjust July 31st, the Fed meeting July 31st?
I think that's tough. It really needs to be a very weak number. I would say zero, negative, something like that to bring July back on the table.
Priya, we're going to let you go to get back to J.P. Morgan. You should see her office.
I can't wait. We're coming over to your new building.
It's unbelievable.
I love it.
So when that new building opens, we're coming over.
Everybody wants the view of Central Park in Upper Manhattan. And Priya said, no, I want to see the Statue of Liberty.
Okay. All right.
So it's just, in her view, is just... It's unbelievable.
What do you think their food court's going to be like?
Food court?
In Park Avenue?
They're having it in like a Greek restaurant and the whole thing. Priya Misra, thank you so much. On this Jobs Day, extend duration. We are going to extend to a moment of history. Is a motorcade attends down Downing Street. The building is 300 years old and goes back to Robert Walpole. It's much larger than the image of the single door behind the podium. The applause now that we hear, our Tom McKenzie is there, the applause that we hear from supporters of Sir Keir Starmer. And of course, in this historic moment, in a fractured United Kingdom, this is Labour that basically did an equivalent to what they've done in previous elections. It was the Conservatives that were torn asunder. I'll let others tell me the reason why that is. what I can report is that the two blocks of the Conservative Party, think Boris Johnson, think Theresa May and others, and the Reform bloc, a Brexit bloc, think Nigel Farage, a newly minted MP, they took away a huge number of votes, and that Labour ascended with the same votes, but taking many, many more seats. Down Downing Street, Sir Keir and Lady Starmer greeting many supporters. Kisses are had. I mean, it's like when Michael Barr comes in.
Exactly.
You know, Michael Barr comes in, everybody's there applauding, waiting for it. The two making themselves across to a podium. I'm not sure quite the protocol here. The sun has come out.
Yeah.
Mackenzie arranged that.
Of course.
It's 67 degrees and rain, and Tom Mackenzie said, no, we need some sun. So they have some sun on a beautiful July day in the United Kingdom. Flags being flown, Union Jack and Labour Party.
As well.
Yeah.
Interesting.
And we will wait here. Further hugs and no doubt staff and people that have led to this decision on Labour to go not for big wins in a single district, but to go across the nation. And where you really saw that was the absolute crushing defeat of the SNP. I visited their legislature at the bottom of Holyrood Road in Edinburgh, and they were destroyed in this election. There's no other word to put it, with Labour reclaiming Scotland, Labour reclaiming parts of Wales, I should say, as well, and really taking back all of the, I believe it's called the Red Wall, the Labour Wall of Northern England as well. We're trying to get to the podium right now. I don't think Sir Keir got our script.
No, exactly.
That we're trying to get to the podium for comments. I see some Welsh flags being flown as well, and I saw some Scottish flags earlier. Do you think Paul choreographed? I would think this has been carefully choreographed.
Yeah, exactly.
This moment.
Exactly. I mean, again, hugs and kisses all around. John, I'm looking at the pound sterling here, up about 0.2%, pretty steady all morning, showing a little bit of lift at pound
And Derek
sterling
Halpenny said so much of this was choreographed in the exit poll and before the exit poll, simply in wisdom, getting very close to the podium right now and into 10 Downing Street. Here is Sir Keir Starmer stepping up to the podium. He is 61 years old, an attorney acclaimed within Labour politics. He has waited and waited from the very tough defeat of a number of years ago, the new Prime Minister of the United Kingdom.
Good afternoon. I have just returned from Buckingham Palace, where I accepted an invitation from His Majesty the King to form the next government of this great nation. I want to thank the outgoing Prime Minister, Rishi Sunak. His achievement as the first British Asian Prime Minister of our country, the extra effort that will have required should not be underestimated by anyone. And we pay tribute to that today. And we also recognise the dedication and hard work he brought to his leadership. But now our country has voted decisively for change, for national renewal, and a return of politics to public service. When the gap between the sacrifices made by people and the service they receive from politicians grows this big, it leads to a weariness in the heart of a nation, a draining away of the hope, the spirit, the belief in a better future, that we need to move forward together. Now, this wound, this lack of trust, can only be healed by actions, not words. I know that. But we can make a start today with the simple acknowledgement that public service is a privilege and that your government should treat every single person in this country with respect. If you voted Labour yesterday, we will carry the responsibility of your trust as we rebuild our country. But whether you voted Labour or not, in fact, especially if you did not, I say to you directly, my government will serve you. Politics can be a force for good. We will show that. We've changed the Labour Party, returned it to service, and that is how we will govern. Country first, party second. Yet, if I'm honest, service is merely a precondition of hope, and it is surely clear to everyone that our country needs a bigger reset, a rediscovery of who we are, because no matter how fierce the storms of history, one of the great strengths of this nation has always been our ability to navigate a way to calmer waters. And yet this depends upon politicians, particularly those who stand for stability and moderation, as I do, recognizing when we must change course. For too long now, we've turned a blind eye as millions slid into greater insecurity. Nurses, builders, drivers, carers, people doing the right thing, working harder every day, recognized at moments like this before, yet as soon as the cameras stop rolling, their lives are ignored. I want to say very clearly to those people, not this time. Changing a country is not like flicking a switch. The world is now a more volatile place. This will take a while. But have no doubt that the work of change begins immediately. Have no doubt that we will rebuild Britain with wealth created in every community, our NHS back on its feet facing the future, secure borders, safer streets, everyone treated with dignity and respect at work, the opportunity of clean British power cutting your energy bills for good. And brick by brick, we will rebuild the infrastructure of opportunity, the world-class schools and colleges, the affordable homes that I know are the ingredients of hope for working people, the security that working-class families like mine can build their lives around. Because if I asked you now whether you believe that Britain will be better for your children, I know too many of you would say no. And so my government will fight every day until you believe again. From now on, you have a government unburdened by doctrine, guided only by the determination to serve your interest, to defy, quietly, those who have written our country off. You have given us a clear mandate, and we will use it to deliver change, to restore service and respect to politics, end the era of noisy performance, tread more lightly on your lives, and unite our country. 4 nations standing together again, facing down, as we have so often in our past, the challenges of an insecure world, committed to a calm and patient rebuilding. So, with respect and humility, I invite you all to join this government of service in the mission of national renewal. Our work is urgent, and we begin it today. Thank you very much.
Prime Minister Keir Starmer in front of 10 Downing Street in London, in the United Kingdom. Eloquent comments there before legislation. We should really point out for our American audience, the process is so different. Paul, you mentioned this. There's an abrupt change. It's not like, 30 days to an inauguration or anything. I believe the Sunaks, within their affluence, have moved out of the 100 rooms of 10 Downing Street, 3 houses pieced together in a lovely garden, and the new people move in.
Yep, right away. I mean, you go see the king, you say goodbye, then the new one comes and says hello, and
that's it.
The form of government, let's go.
Maybe Larry the Cat gets fed. We'll see. Right now, we're going to get expertise on what we're going to do here. Instead of the political punditry, which has really been quite something, the Prime Minister and Lady Starmer, again, greeting people close to the 10 Downing Street doors, so these must be worthies up the labor food chain. We're going to go to the city food chain, which is the expertise of our Kriti Gupta at Queen Victoria Street. Kriti, I've had the honor of attendance with the Consul General Tom Harris of the United Kingdom of the Mansion House dinner, which was, I guess, postponed this year, is the city meets with a political Whitehall group in this spectacular black tie dinner. What will the Mansion House dinner look like with Labour in charge?
You clearly get fancier invitations than I do, Tom Keene, so you're going to have to take me as your +1 the next time you attend.
But Kriti, the day afterwards, I had dinner at the McDonald's at Liverpool Station just to balance it out. How will Labour be greeted by the city?
The McDonald's clearly an ode to the United States. It's an interesting one because the city has largely expected this. Remember, this was largely telegraphed ahead of the election itself. And you had even an exit poll at 10 p.m. last night. Tom, they basically project this BBC poll onto the Houses of Parliament. It's quite the spectacle, but it really shows you just how much this change was needed. And again, something that when that exit poll, which is usually a very tradable event, actually showed up, there was almost no market reaction whatsoever. And I think to answer your question about Citi, they're still looking to figure out, the financial community is still looking to figure out what a Labour government actually means. They've made some big promises in terms of infrastructure spending, but there's also very little money to actually do that spending with. So these next 100 days are going to be crucial about whether they can literally put their money where their mouth is.
Kriti, I'm looking at the pound sterling, just up slightly here. What's the expectation within the City of London about what a Labour government means for this economy?
Well, I'm old enough to know that, or to remember that not too long ago, people were comparing the pound to an emerging market currency. If you hear the commentary right now in the FX space, they're looking at the pound as a safe haven. Now, not the safe haven of the yen or the Swiss franc or even the dollar, but just an island, an oasis of relative stability. And I think that's the takeaway for this economy, especially after 14 years of conservative leadership. The idea here is simply we need continuity, and that's really what Labour represents more so than anything economic.
To cut to the chase, Kriti, and we've got a limited time with you here in your busy day. Kriti's doing the show. She's like at our 1 a.m. She's rocking.
I know.
With Guy Johnson and Anna Edwards. Kriti, this was about Brexit. Reform, Conservative combined. In many districts, particularly in the north, Reform was the #2 election. How does Sir Keir Starmer, Prime Minister Starmer, amend Brexit? Is that clear or is that a mystery?
He does it with a great deal of caution, and it's going to be one of the top things that a lot of folks are watching for, specifically when it comes to things like gently, again, re-entering the customs union. This is not something that they have necessarily telegraphed or said that this is going to happen, but something that a lot of people are waiting to see if they do have those friendlier policies towards Europe. Another one, you mentioned the city, Tom, is going to be what their policy looks like for under 30s in the financial services sector. That ease of movement is crucial for the banking sector, especially American banks that have these operations here in London and in Paris as well. So those are going to be the crucial elements of that post-Brexit story. But again, to your point about reform, a lot of folks are really categorizing this as not necessarily a Labour victory, but a Conservative loss because of how many seats Reform won. Nigel Farage, of course, the poster child of that.
Kriti Gupta, thank you so much. Kriti, our regards to Francine Lacroix, also leading our coverage last night. It is Jobs Day. We're 36 minutes away from a jobs report in America. You got to believe even Sir Keir Starmer will be briefed on it.
Yeah, sure.
Maybe over champagne,
exactly.
but he'll be briefed on it.
Or a nice warm pint of beer. change in non-farm payrolls here, Tom. 190,000 is the number. The number's been coming down, that consensus number. We were, as you pointed out, 200,000 about a week ago. Last period was 272,000. So, you know, what the economists are saying here, this is still a vibrant labor market, but it is a cooling labor market. And we saw the unemployment rate, you know, which had been kind of 3.6% or now, but 4%. The expectation is that will hold steady here this period. And let's talk about wages, Tom. People need to get paid.
I agree.
Average hourly earnings year over year, looking at about 0.3% on a month-to-month basis. I'm an annualized kind of person, 3.9%. That's still solid, but it is down from 4.1% last period. So again, it kind of ties into that narrative. Still a vibrant labor market, but a slowing one.
We'll have all that for you here in 33 minutes with some good voices. Lindsay Piegza will be with us with Stifel. And she's been very, very forceful about a Fed that will take its time. Ben Emmons scheduled as well. Much going on here as we move a number of stories forward for you. On the United Kingdom, Marcus Ashworth.
That's going to be good.
Scheduled to be with us, and he's really encyclopedic. Really looking
punches either.
forward to that. I mean, you got to play. You got to play British music. I mean, you know, I don't know what's secure. For all I know, he grew up listening to country in Nashville. But you gotta play British music. I mean, come on, folks. We did the American music on Wednesday. Stay with us, Bloomberg Surveillance. It's Jobs Day.
Now these days are gone. I'm not so self-assured. Now I've changed my mind. I'll open up the doors. Help me if you can. I'm feeling down, and I do appreciate you being around. Help me get my feet back on the ground. Won't you please, please help me, help me, help me.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
We're addicted to the parlor game, the Fed, the monetary ballet.
Where do you see opportunities in that fixed income space here in 24?
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
Another legal setback for Donald Trump, this time across the pond.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Paul Sweeney, Tom Keene, Michael Barr, Lisa Mateo has come in on a very holiday-lengthened work week. It is Friday. We've got the whole team here in news around the world. Marcus Ashworth will join us as we continue our coverage of a newly minted Prime Minister Starmer of the United Kingdom. We looked at the French elections on Sunday, but what we really look for, Paul, 29 minutes from now, a key jobs report.
Exactly, Tom. I mean, again, we've had a labor market that most economists would tell you is still pretty vibrant here, but it is slowing whether you look at total jobs or whether you look at wages. But still, if there's any real change to consensus, what will that mean for the Fed?
My basic feeling is wait for the data. I just don't know how to punditry it other than the numbers coming down. There'll be revisions. Some people, including Anna Wong, have been brilliant on that. They're looking for revisions or substantial revisions. And then, as you mentioned, 5 minutes ago, Lisa, the 5 hot dogs I had, they're just killing me.
Only 5?
I got. Could you get one of the interns to get me a stronger, like a double Sanka? I think that's what I need. It's killing me today, folks. Where was I? I mean, we're talking about wages.
Yeah, sure.
I think you're right. The real wage is the heart of the matter.
Yeah, exactly. So, the consensus here is 3.9% average hourly earnings growth on an annualized basis. Still solid, but down from 4.1% last period.
Before we get on to Ben Emmons and Lisa and that, YouTube, I don't know what to say. How do you talk to people out on YouTube that think we should play instead of the Beatles or the Rolling Stones coming up or the wonderful Sir Rod Stewart? Why hasn't he been given a lordship?
He's not a lord?
He should be.
Okay.
He's in Las Vegas doing his final tour. They want us to play Judas Priest?
No.
In terms of the United Kingdom? Are you kidding me?
All right, I'll go
From
there.
desert plains, I bring you love. From desert plains, I bring you love. Thank you for that. Out on YouTube, I guess. Maybe we'll put Judas Priest under consideration. Right now we go to, in the Interactive Broker Studios, we go to our Bloomberg Business Flash, saving us, Lisa Mateo.
I will try my best. It is back to trading on Wall Street after the holiday. Yes, all eyes, you said it. Today's June jobs report, a quick breakdown of the numbers. Bloomberg survey shows payrolls probably rose by 190,000 in June. Average hourly earnings likely increased 3.9% from that year earlier. The unemployment rate probably seen holding at 4%. We will see in less than half an hour from now. Ahead of it, it's kind of this wait and see approach. You have NASDAQ futures up 0.1%, 21 points. Dow futures little change, down 26 points. S&P futures little change, down about 0.2 point. We head over to the bond market. The 2-year yield 4.68%, down 2 basis points. The yield on the 10-year 4.33%, and that's down 2 basis points. To currencies, have to point out the pound added to its longest winning streak in 4 years after Labour won a majority. Right now, the British pound 1.2788 against the dollar. European stocks rising. We have Stock 600 up about 0.2%. And we have the CAC in Paris. That's up about 0.2%. Their second round elections take place this weekend. Company news. It's all about Saks Fifth Avenue. Parent company HBC agreed to buy Neiman Marcus Group for $2.65 billion. You have Amazon Salesforce. They're also helping facilitate that deal. And Macy's up more than 8% now. The Wall Street Journal reported Ark House Management, Brigade Capital Management have raised their buyout offer to about $6.9 billion. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, thank you so much. On the job economy of this nation, on what it means for the Fed and what it means for you, Ben Emmons joins us right now. Thrilled to have Ben with us on this Jobs Day. Ben, at the end of your report, you say the surprise could be up. Everybody else is looking south. Why is Ben Emmons looking flat to north?
Good morning, Tom. First of all, thank you very much for having me. And this time it's under my own name. This is amazing. So I have been running this regression on jobs since the pandemic. And what I noted was that each time you had the ADP report showing strength in the construction and leisure sector, and to an extent healthcare sector, seems to be somewhat of a precursor what could happen with this report. And the ADP number, although was kind of flatlined for expectations on Wednesday, those particular subcomponents were really strong. So there's still a lot of demand for that let's say maybe temporary labor or just labor out there. And I think this is why this number could still see somewhat of a surprise. Now, it's not major from that regression. It's maybe 28,000 jobs more than what the consensus is implying. Nonetheless, that would be a surprise given where we are right now with the markets.
We interrupt our coverage with Ben Emmons of the jobs report here in 25 minutes to look at the shot of 10 Downing Street in the sun-dappled sun, and our Tom McKenzie reporting that Lawrence the cat is at the door, staring at the door saying, what the hell is going on? Can you imagine the cat? Everybody moves on. All the cat wants to do is be fed. Exactly. The cat, I kid you not, folks, it's on the upper step at the 10 Downing Street, 300 years old. Why don't we have a Lawrence the cat at the White House?
I don't know.
Please, continue with Ben Emmons, and we'll continue to monitor a starving Lawrence the cat at 10 Downing Street.
I don't think Larry cares who's in government. Just open the door and
feed me.
Exactly. Hey, Ben, how do you think that the Federal Reserve is kind of looking at the labor market these days? Is it supportive of their wait-and-see approach, or does it suggest maybe they need to start doing something?
So the minutes, Paul, were somewhat interesting in that sense, and underscoring that they see these cooling trends happening, and that they're also seeing labor supply increasing from that immigration. They think actually that maybe the equilibrium in the labor market may be a little bit higher, but that's really supply-driven. So meaning more supply than potential demand, why wage gains are starting to moderate. I think this is important to them because as the risks come into balance, as Powell said this week at Sintra, it does give them the opportunity to say, if the labor market is in balance, all you really need is just 1-2 more CPI reports, you can start lowering rates. So we do get closer, I think, to that decision-making on rate cuts if this report comes in line with expectations, I think.
So again, I guess that Ben suggests that this July 31st meeting coming up here at the Fed, no action there. But then I guess the attention really then focuses on that September meeting. How do you think the Fed is thinking about what they should do in September?
Yeah, the should do is particularly important, Bob, because if you have cooling labor and there is possible risk of more layoffs that could accelerate, as the minutes say, then you should lower rates, right? You cannot really stay too long behind because otherwise you're going to start undershooting everything, including inflation. But it's still a bit, I think, early for them at least, but it indicates from Powell's commentary, also including these minutes. So September is a really important meeting because, as we know, right in front of the election, nothing will happen at that election date. I think it would otherwise happen in December. So I think this is where we're at right now, and the market has priced it more or less to perfection. Right? It's set like the probability for September and December about the same. So it's kind of a toss-up. So this report will determine a lot, I think, where we're heading from here.
I mean, red and green on the screen, but Paul, we haven't even mentioned it today with all the political idiocy. The NASDAQ is printing green this morning.
Yeah, the NASDAQ looking up about 0.1%. Ben, when we think about labor, we think about the consumer here. Kind of what's your view of this U.S. consumer out there? Because, again, that's another data point for the Fed.
Yeah, it is. And I think there, too, like the trends are downward, so to speak. There's just basically a slowdown in spending that's happening. But I think I'm questioning really what is the true slowdown here, because if you don't get a major acceleration in unemployment rate, we know that there's not going to be too much of a deterioration in spending. So I think the Fed looks at this as others, as the market is, like this is a very slowly declining trend there in spending. I think this is what the 10-year yield has been showing us, right? We peaked at 4.75 in April and been slowly declining. So I think this is just where we're in right now, like this very slow patch. I think that describes the consumer spending currently.
Ben Emmons, thank you so much. FedWatch Advisors, thank you. Ben Emmons this morning. The royal family has just issued a tweet with a photograph of, and let me read it formally, the Right Honorable, that's how we address Paul here, the Right Honorable Sir Keir Starmer, MP, meeting with the King. There's no kissing of hands, but a good handshake on the brocade carpet. And of course, it brings us back to the emotion of the greeting of the new Prime Minister Truss by the Queen of England days before she died and left us. But official photo released now, and again, our Tom McKenzie at 10 Downing Street, as we heard from Keir Starmer in the last hour. We'll see much more, I'm sure, from the Labour Party and the new Prime Minister through the day. Marcus Ashworth, scheduled to be with us. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. Keir Starmer is officially Britain's new Prime Minister. The Labour Party won a landslide victory in the UK snap election, dramatically reshaping the political landscape after the Conservatives imploded following 14 years of rule. Starmer's Labour took 412 of the 650 seats in the House of Commons, the most since Tony Blair's 1997 triumph. Starmer spoke today in front of 10 Downing Street.
If I asked you now whether you believe that Britain will be better for your children, I know too many of you would say no. And so my government will fight every day until you believe again.
Meanwhile, the Tories only garnered 121 seats, their worst ever performance. Heading into the make or break stretch of his re-election campaign, President Biden will rally supporters in Wisconsin today. Yesterday, he hosted 4th of July festivities at the White House. The president and First Lady invited military families. President Biden responding to someone who shouted, "Keep up the fight."
You got me, man. I'm not going anywhere.
Later tonight, ABC will air an unscripted interview with Biden after last week's rough debate performance. Hurricane Beryl has strengthened back into a Category 3 storm and is headed for what could be a direct hit on Mexico's Caribbean coast resort of Tulum. It caused severe damage in Jamaica, where this tourist from Florida says she can't get out.
So what do? Stay here all night, sleep out here on the sidewalk? They don't let you into the airport. We've already checked out of the resort. So we're on our own pretty much. Beryl
was the earliest Category 5 hurricane in the Atlantic. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Well, Michael Barr, thanks so much. Staying focused on the American labor economy. And again, Paul, it's two jobs reports. There's the nonfarm payrolls report, and then there's the household survey. And economists parse them very, very differently. That's what leads to so much confusion here, is a report is released.
Yeah, and this change in non-farm payrolls is certainly something that the Federal Reserve looks at, Tom, and Ben Emmons was just suggesting it's one key ingredient there. Also looking at the consumer and the health there of the consumer and consumer spending and consumer debt. So again, looking at a solid labor market out there, but one that on the margin has been weakening for some period of time. Has it weakened enough for the Fed to say, all right, we can jump in here and start cutting rates?
You've mentioned this, the K-shaped recovery.
Yeah.
I think there's a part of America, I'm going to eyeball it at 25%, maybe as low as 20%, that it's business as usual. It's like, which airplane ticket can I buy? What can I do? We're asset heavy. We're going to buy this house. We're going to buy that. I see houses around the country. Some, these are nice residences. They sell in 3 days.
Yeah.
All cash.
Yep.
Boom.
Yep.
Done.
And then there's the rest, the folks that maybe do not own stocks, bonds, real estate, that the inflation has really hit them square.
Right.
And the absolute price levels that we're all paying for things today versus, 4 or 5 years ago is just stunning.
Sam Rowe with the Paul Sweeney chart. Sam Rowe, he works every day of the week.
I know.
I mean, he's just huge. Sam Rowe out with a TSA high demand for air travel chart, way above where it was before the pandemic. I mean, and yet the airlines are struggling. I don't get it. Job economy, we'll get it in 16 minutes. Stay with us, Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We have little movement in futures with about 15 minutes of key jobs data. Quick breakdown is expected to show hiring slowed down last month with the headline number seen rising 190,000. Ahead of it, we also had more Fed speak. You had the Fed's John Williams said that while inflation has cooled recently, policymakers still have a ways to go to reach its 2% target on a sustained basis. So we have NASDAQ futures, little change, up about 15 points. Dow futures, little change, down 25 points. And S&P futures, little changed, down a point. The 2-year yield, 4.68%. That's down 2 basis points. The yield on the 10-year, 4.33%. That's down 2 basis points. Bitcoin, have to point it out, sinking for a fourth session in a row. We have Coinbase Digital down more than 4%. Marathon Digital down nearly 6%. MicroStrategy down nearly 10%. To company news, Foxconn manufactures iPhones for Apple. June quarter sales, well, it was about $48 billion. That beat estimates. That was thanks in part to, of course, its growing AI server business. Apple down about 0.1%. And Tesla shares still on the rise, up more than 2% after its longest winning streak in more than a year, added about $200 billion in market value. And since we talked Tesla, Chinese EV maker BYD, Turkish officials say it's soon going to unveil an agreement with the company to build a $1 billion plant in the country. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. What we're going to do here is do a couple minutes with Marcus Ashworth on the history being made in the United Kingdom. Of course, the ramifications over to the French election Sunday and on to, I believe we're scheduled to have an election in November.
Yes, that's what they tell us.
If we get there. Jane Foley's going to join us here seriously on the litmus paper of the global system, foreign exchange, currency markets, and off the jobs report in 11 minutes. And then Lindsay Piegza will join us. I'm really thrilled she can join us because she's really has an outlier call pushing against the certitude of rate cuts. We begin in the United Kingdom with Marcus Ashworth. Marcus, thank you so much for taking time out after an exhausting 2 days. The United Kingdom needs investment. Where will it come from?
Well, it's going to come from internally. There's lots of savings since the pandemic, and it's going to come from America and the rest of the world because we are strong and stable. We've got an amazing reaction to a very low turnout, but we are a United Kingdom because, importantly, through this, the Scottish National Party got beaten heavily. Labour has taken control of Scotland again. The talk of Scottish independence is going to go it's going to disappear, hopefully.
Yeah.
At the same time, we've had a very strange election. Tactical voting is dominated. The Labour Party has won 2/3 of the seats. Out of 650 seats, they've got 2/3 of them on only 1/3 of the votes. So we've also had this third party, Liberal Democrats, doing 7 times more seats, but no change in their votes. But, that's how it
Marcus, to explain to our American audience across this 4th of July nation, the distinction here in that reform in some of the more blue-collar, labor-philic districts came in second place, a strong second. But does Nigel Farage, member of Parliament, and his Reform Party, do they have any voice in the process in the coming 12 months?
Well, the interesting thing is there's 3 sets of new parties that have come sort of out of nowhere. We've got the Greens with 4 seats. We've got Reform led by Nigel Farage with 4 seats. Importantly, it's himself, his chair, Richard Tice, and 1 or 2 well-known other people, not some of the other lunatics he's had. So that's a proper platform for Nigel Farage to. He got 4 million votes and only 4 MPs. So he's going to feel pretty raw about that, but he's got a pulpit now in the House of Commons. He's going to get legitimate media attention rather than just sort of unnecessary that he's had so far. And we've also got a pretty strong pro-Palestine platform as well. 4 MPs beating Labour, including the old Labour leader, Jeremy Corbyn. So the smaller parties have done very well here, almost like a European type feel to some of the results. A very strong tactical vote. But yes, we've got populism. It's embedded now with Nigel Farage. And he has said very clearly, he's destroyed the Tory slayer. He's taken basically the Tory vote down to half. The Tories lost 2/3 of their seats. Most of that, 2/3 of that, because of reform. He has had an incredibly outsized reaction. As you said, he came second in 98 seats. That's the big populism threat hanging over not just the Tory party now, but the new Labour government, who won on a third of the votes, a huge majority, but it's not necessarily a very deep majority that and strength and power he's got. It's wide, but not deep.
Marcus, in reality, what does the Labour Party want to do vis-a-vis the European Union? What can it do to the extent it wants to get closer to the EU?
I don't think the Europeans really want to know much about us at the moment. They don't want to get out of anything to do with the European Court of Justice or anything to do with free movement. It's their shibboleths. I think it's going to be disappointing for Labour. I hope they've learned that lesson that well, actually what Rishi Sunak did with a thing called the Windsor Framework and getting Northern Ireland back into some form of political, life being out completely in suspension. He's done a pretty good job as best he could, Rishi Sunak, with a poor hand. He's played that poor hand very poorly politically. But now I think the Europeans are going to be maybe a little bit nicer, but it'll be very much, you show us what you want to give us, and then we'll think about it. You left the golf club, you ain't getting back in.
Marcus, 30 seconds is all I got. I got to get to Jane Foley on this jobs report in foreign exchange. Marcus Ashworth, there's a special relationship between France and the United Kingdom. So Prime Minister Starmer is going to meet wherever with who in France?
Well, it's still President Macron because, that's how the Fifth Republic works, and it depends who he chooses to be his prime minister, and he looks like he's going to have more of a choice than it would have been after the first round. I think the second round will show there will be no clear French, bloc who can run on its own a government. The prime minister has a lot less powers. In fact, the French president's got more powers than any other Western leader by quite some way. I don't think it matters either side. I don't think the French care much about the UK, and I don't think the UK care much about France, to be brutally honest. And I think they've all got our own problems. There will be some rapprochement, but it won't be instant.
That's French, rapprochement. Yes. That's all you have Marcus on.
That's all
he talks French. Marcus Ashworth, thank you so much after an exhausting evening. We are commercial free here to the jobs report and beyond, to the 9 o'clock hour. Lindsay Pieg's going to join us, Liz Ann Sonders in the 9 o'clock hour again. Friday, a holiday across the nation. Joining us now with Rabobank London, Jane Foley, head of FX strategy. Jane, I've got to ask it on an obligatory basis. What is your pound sterling call after the events of the last 24 hours?
Well, to be honest, if you're thinking about emphasis on the pound, it's probably more interesting to look at euro sterling, because if we look at cable, well, it is going to be the dollar, I think, that really does or really will do, emphasize some of the movements over the next few months. I think the US election is going to be far more interesting as a market event than the UK election. And certainly who comes to power, certainly if Trump comes to power, I think there could be inflationary connotations which could drive the dollar higher, and that could keep cable from making gains. But this morning and yesterday, the pound, because the dollar is weaker, the pound has become the best performing G10 currency in the year to date, and it has been creeping up. Yeah, it has been creeping up. Last year, it was the second best performing G10 currency after the Swiss franc. And that, of course, it doesn't make sterling a strong currency. It's not. But it means that it's been slowly gaining ground after Liz Truss, really, in September 2022, drove cable to its all-time lows ever. So I think the market is hoping, best case scenario from this new government in the UK, that we can get, a lack of drama, that investment growth, which has been really thwarted in recent years by Brexit uncertainty, by, electoral chaos, by Truss, that more boring agenda really in politics can bring back investment growth and maybe allow sterling to carry on slowly creeping higher.
I mean, Paul, I look at euro sterling, I never look at it. Francine Lacroix used to yell at me. Look at euro sterling, it's all that matters. She'd break out into Italian, chastising me. It's a perfect pennant. The moving averages converge right in, and that tells you it's going to break this way or that way. How about that for sophisticated analysis?
Cool. So, Jane, this solid performance by the pound sterling, does that reflect real economic gains on the ground, or is it more just of, as you were suggesting, maybe a little sense of stability coming back into the English political
Yeah,
front?
I think it's the latter because, we look at the value of cable and it may be, the best performing currency this year, sterling, but it's not strong. I mean, if we look at the average for cable over the last few decades, it's around about 150, 152, something like that. And here we are, far below that. So I think it's a sense of stability. There is some hope. I mean, the fact that sterling, hasn't sold off on what is essentially, a government that has billed itself in the past as left wing means that yes, this government or Starmer, the new prime minister, has been successful, in billing himself as moving towards the centre. We've had Rachel Reeves, the new chancellor. She's done a lot of work in wooing investors. We all know that is really important because the debt as a percentage of GDP in the UK is at its highest level since 1961, when we still had the overhang from the Second World War. So we all understand the need for private sector investment. Now, best case scenario, I think, for both this government and for the markets is that the private sector investment does come, that investment growth improves, that therefore growth improves and productivity improves. That's the best case scenario. And if you do get that, I think sterling will continue to move higher. But of course, there's an awful lot of risks in that scenario.
We're going to squeeze one more in here, Jane, before the jobs report. Thank you so much for joining us this morning. Is there American exceptionalism from Rabobank? Is the prism say we're leading the way?
Yes, there is. But, the reason for that, and certainly from a foreign exchange point of view, is that there is exceptionalism around the US dollar. It is the reserve currency. It is the currency that so much trade is done around the world. And that means that the dollar is perhaps less sensitive to its own domestic fundamentals in terms of things like the budget, the current account position, than another currency would be. And of course, if we look ahead, if we do get more US tariffs, for instance, well, that's all going to be inflationary. And that could mean that the Fed's interest rate cycle could be quite short.
Well, I'll have to leave it there. Jane Foley, thank you so much for too short a visit with Rabobank. Can't say enough about the bank. They're really important in hedging currencies for commercial transactions. They got a real pulse on the global market. I just looked at Apple and NVIDIA, and they're trading pretty much level, plus or minus pennies.
Yep.
You think anybody's trading today? Like at 9:30 when the market opens, is there any there?
I don't know. I think you have to call your fund manager who's on the beach somewhere to ask if you can execute a trade here.
Yeah.
So, but Apple's up 15% year to date, and remember this thing was down 15-20% for most of the year. So it's had a rally over the last few months here, just in the expectation or the belief that they're going to have a play in this whole AI thing.
Sparta put out a memo, and he said we had to dress Friday like casual.
Yeah.
You killed it. I mean, you look
absolutely.
You look like you're going to go to the 19th hole and have a beverage with Damien.
Exactly.
After he does 18.
He's already out there. But we're doing a little TV radio simulcast from 10 to 12 today.
Lisa, what do you think? You're doing a simulcast?
Sure.
Makeup? Oh my word!
I don't know.
I got the Lily. I got the Lily Pulitzer tie on here.
I love it. The Papa Green with the beige suit.
It's like a summer wedding tie thing going.
Remember when President Obama wore the beige suit?
Oh, I hear about it. Young
incident.
Pharaoh. Pharaoh could be in Capri now, for all I know. He'll email me, and why are you wearing that beige suit? President Obama set the fashion trend there. It's a
back
traditional
when that was news.
trend.
Back in the day when that was news.
News for us is 30 seconds from now. We will have a jobs report. We're going to give you complete coverage, and we are commercial free here in this important moment. Thank you for tuning in on YouTube. Search and subscribe Bloomberg Podcast. It's becoming a new habit for many, and we'll have to see. Thank you for your comments out on live chat. We'll get the data here in just a moment. Here again with S&P futures up 2.
Yeah. So
the data coming out. Oh, Ben Emmons looks brilliant.
Yep.
Ben Emmons looks. How does he do that?
I don't know. He's got his own shingle.
Look at the revision, the Anna Wong revision. Markets move here, green in the screen. Yield right now coming in a much lower yield here. The Sweeney yield, the 2-year, explodes down 6 basis points. Paul, I'm going to go to 206,000 on non-farm payrolls, but the revision number, a negative 111, is just extraordinary. So what I do there is I got to go 206 less 100 is 106.
I see what you do.
Less 11, I believe, is a 195. A 95. No, 95, yes. 95,000 with revision. 206 less 100 is 106, less 11 is a 95,000 statistic. And we see markets lift, given it is the Friday after the 4th of July, and the yield space comes tumbling down 6 basis points, 7 basis points in the 10-year. I'm looking at the real yield to see out of range, not out of range yet, 2.02%. Paul, what do you see on wages?
All right, just looking at the wages here, Tom, up about on a year-over-year basis, 3.9%, right in line with expectations. Last period, it was 4.1%, so a little bit of a slowdown there as expected. The unemployment rate for those watching that, 4.1%, Tom. And the consensus was for 4%, which is where we were last period. So a tick up in the unemployment rate. Again, the headline, 206,000 jobs added. The consensus was 190,000. Last month, again, the 272,000 revised down to 218,000 there. So some big revisions, as you were pointing out, Tom.
Interesting to see, and again, markets further moving. Equity markets, maybe not like it would on a normal jobs day, the VIX 12.26, but certainly I see it in the 10-year real yield, 2.02%. Critically not through the range, but back down to a new lower 10-year yield by 6 basis points. I can't say enough about our next guest, and she's perfect right now to speak to on this report. Lindsay Pieggs at Stifel has staked out a slower Fed, that this is a Fed that will wait for the data and they won't move until they see the data. She said basically higher interest rates, and yet we've ebbed down. Now we've had higher rates with all the White House politics and Trump-Biden and Biden-Trump and all the rest. But Lindsay Pieggs joins us right now. Lindsay, I'm going to take 206,000. I'm going to subtract 111,000, and I believe that's a positive 95,000 non-farm payrolls. Is that enough for you to say this is a Fed that will move to a lower rate regime?
Well, it's up in the right direction. The Fed has been looking for a cooling in terms of market conditions to suggest that needed impact, negative impact from higher rates is filtering through into the real economy. But I hesitate to make a pivot in terms of policy expectations based on one data point. While arguably we do see this rebalancing at a gradual pace, in the aftermath now of the fastest backup in rates in 4 decades, the expected slowdown in demand and the overall impact of labor market conditions still remains muted, again, relative to expectations. So momentum is slowing. And we've seen this in many key categories of economic activity, particularly as younger and lower income consumers more heavily adjust spending. But the readjustment, particularly amid still solid wage growth this morning, 3.9%, remains less than anticipated. And I think that continues to then undermine at least some expectations for a near-term reduction in rates, or at least it undermines the necessity for less restrictive policy return. That's not to say the Fed isn't gearing up for rate reductions, and this is clearly a Fed desperate to provide relief. But one data point is not enough to instill the confidence the Fed needs against the backdrop of still elevated inflation.
Lindsay Pieggs with us. We are commercial free for the half hour. Thrilled that she could join us this morning. In the yield space, Paul, I'm seeing a leveling out under 2.02 on the, 2.02 on the 10-year yield. Futures not churning. I would say there's a Friday, July 5 effect, Paul, in futures. I'm not getting the pop that I would expect out of this.
No, exactly right. We've got, again, the S&P up 5 points, the Dow up 27 points. Lindsay, does a 4.1% headline print on unemployment rate, how do you think that plays at the Federal Reserve?
I think that continues to give the Fed optimism that we are seeing, again, this broader cooling in conditions. But we have to remember that 4.1% still is extremely low and leaves us well below the lower bound of what the Fed says is that full employment range. So the Fed still has a good amount of wiggle room to remain at these relatively restrictive levels for some time longer, to ensure that we do see this continued cooling, not just of labor market conditions, but this ongoing cooling, disinflationary trend in terms of price pressures. And that's really where the Fed wants to see this improvement. It's on the inflation front. So we want to make sure that this softening in demand, this softening in labor market is accompanied by a further reprieve in disinflation. Because if it's not, the Fed will opt to keep rates restricted even after we see further reduction in top-line activity.
Surveillance is about a debate, a healthy debate of our wonderful guests, including Lindsay Pieggs at Stifel. Neil Dutta messages me from Renaissance Macro. Powell should use July to set up a September cut. His lead is get on with it.
Good thinking.
From Neil Dutta.
Good idea. Lindsay, when you see labor numbers like we see today, how does that inform your view of this U.S. consumer here?
Well, I think it's very clear that the consumer is beginning to feel that slowdown. And we see this at a time when we're seeing weaker durable goods orders activity in May. So this painted a weaker expectation overall for growth as we're looking to the second quarter numbers, raising a concern of again, whether or not this cooling of activity will be accompanied by that ongoing inflation relief. And for the Fed, again, the bar was set relatively high, not based on many months of cooler labor market conditions, but cooler inflationary data. So this is one step in the right direction. But in order to ensure the Fed the needed confidence that inflation is going to get back to 2% on a sustained basis, we need to see this translate into those price numbers. And with less than half the year left, and those base effects from 2023 likely to be very muted in the second half of 24, I expect inflation to still remain at these elevated levels. And so even with improvement in the labor market, it's not going to be enough to justify.
Okay, this is important. I mean, we got to get to Liz Ann Sonders. Lindsay Pieggs, this is too important here. Neil Dutt is talking about July, let's go to get ready for September. What are you framing out this Fed would do if you have a more strident view of inflation?
I think the Fed's on the sideline through the end of the year. Wow. I think there's no motivation for the Fed to rush, given the fact that we saw an extreme amount of head fakes at the start of the year with 3 months of acceleration. And even when we strip out a lot of that noise and we look at core services, excluding housing, so a measure the Fed calls the super core, we're talking double that 2% intended target. So a number of key metrics are still saying there's not enough indications that we're on a sustainable path to 2%. Okay. So we need that ongoing message of patience reinforced by Fed officials so we don't see them get ahead of themselves as they did at the start of the year.
Lindsay, when we invented this show, this is what it's about. I would love to get you and Neil Dutta on together to have a collegial debate about where we are after Labor Day of this year. Dr. Pieggs is with Stifel. We are thrilled to have join us now. We are commercial free in this hour. We're going to use as much time with her as we can. Liz Ann Sonders is with Charles Schwab, and she has earned the ability not to work on the Friday after 4th of July, but she's a trooper. She's here. Plus, the Gordon guy. I mean, you know, like he wants the job. Let's be honest, Paul.
Yeah, he's pretty good.
He's pretty good.
Yeah, shame on the BLS for doing this. Day after the 4th.
What an interesting market. Liz Ann, there's a lot of people. They're on the deck. They've got the light tonic. They've got the gin. They got the umbrella in the drink, whatever. And they're going, what in God's name do we do now? What is the action allocation of Charles Schwab into the end of the year?
Well, Tom, we've talked about this a lot, just the beautiful discipline that is rebalancing. And I think that helps when you have a concentration problem like you do now. But the concentration problem is exacerbated by the huge underperformance outside of the small handful of mega cap names. The NASDAQ's average member maximum drawdown is almost 40% this year. That also breeds opportunities. And it wouldn't surprise me if we see some consolidation and some convergence where you get some profit-taking episodes up the cap spectrum into those leadership names, but opportunities present themselves in other areas of the market. We've seen some cyclical leadership crop up in the last week or two. That's kind of interesting, but I think really key, you still have to stay up in quality. Just the profitability differential, particularly within an index like the Russell 2000, is a 20 percentage point spread in the past year between not profitable and profitable. Strong balance sheet, high interest coverage. So that's our message for within the equity asset class.
This is what surveillance is about. Lindsay Piegza with us, Ann Sonders with us in 10 minutes. Neil Dutta scheduled to join us now. We got him he's on a ferry to one of the islands. I don't know which one he's on, but we'll get Dutta.
Cell phones.
I mean, Sonders is working today.
Exactly.
Even though the backdrop, it's amazing how they can put that backdrop wherever she is.
I know. That's how it works.
It's a technology.
It goes with me.
Exactly. Ann, so what's the catalyst for this market going forward? If there's any life left in this market for over the next 6 months or so, is it Fed-driven? Is it earnings-driven? A combination? Is it a rotation, as you were suggesting, maybe into some other sectors?
I think it is a combination. We've seen less of a correlation in terms of the expectations around Fed policy, the sort of parlor game of when will they start, by how much. Even just with the jobs report today, it was probably knee-jerk on the payrolls with that before digesting the additional information. You actually saw a move down in terms of expectations for September start to rate cuts. I think it's more on the rate side of things. I think yields is the more important driver. Now, there's a relationship, obviously, between what's going on with Treasury yields and expectations for Fed policy. But I think a calming in some of these sort of shots higher in yields would help the equity market. Obviously, earnings is a big part of that, and we're sort of at the prove it to me moment in the equity market, given that even for the Magnificent Seven of the top 10 names, you've seen more price appreciation than you have earnings appreciation in terms of consensus estimates. So I think earnings season will be incredibly important. The combination of top line, bottom line, but also the protection of profit margins, and whether that is across the board or still in a small handful of names.
And Ann, you start off our discussion here talking about the top-heavy nature of this market. How unusual are we today in terms of that market concentration versus maybe some past cycles?
Well, the largest 10 names as a share of the S&P is up around 38% right now. That well exceeds what we saw back in 2000, but there were periods back in the 60s and even in the, I think, late 20s or early 30s where you had similar concentration. Now, in the case of the early 30s, of course, that was a less sophisticated market backdrop, and there were not as many companies. There were some of those dominant companies, but I think that the concentration problem becomes more acute when you have a large share of the index underperforming the index over whatever rolling period you want to look. It's only about 17% of the S&P that has outperformed the parent index over the past year, and it's lower for an index like the NASDAQ. So it's the combination of leadership up the cap spectrum, dominating performance of the cap-weighted indexes, but the lack of participation in other parts of the market. It's that combination that tends to suggest risk is elevated.
And I'd love to be one of those folks that I think I'm the smartest person in the room and saying, I'm going to start looking for value outside of those big 10, 7 names. But boy, you have to have courage to do that, don't you?
Well, but here's the other funny thing when we talk about the performance up the cap spectrum in the mega cap names, whether it's the largest 10 or the Mag 7. Actually, only one of the Magnificent Seven is in the top 10 best performers within the S&P. We're so focused on the contribution that they represent, which is price times capitalization equals contribution to the S&P. But there are a lot of names, in addition to not performing very well, that are performing incredibly well. In fact, last time I looked at it by sector, there were 3 in the top 10 that were utilities stocks, GE in the top 10. So there are opportunities outside of the largest 10 or the Magnificent Seven or the Fab Five, whatever terminology you want to use. And I think that gets lost in so much focus on those names. It's the cap piece of it that has been so additive to contribution to overall S&P returns.
We continue with Ann Sonders, Charles Schwab, Neil Dutta on deck. He'll be with us here in about 4 minutes. We've got a lift to the market, much less than I'd expect off the jobs report. It has something to do with this Friday. this special Friday across the nation. And NASDAQ up 0.2%. Green on the screen, 12.23 is the VIX. The yield space moves, but within range. The 10-year real yield, 2.03%, is decidedly not broken down off of a huge revision that we saw, a negative revision to non-farm payrolls after the last 60 months. Lizanne, I want you to talk to a given Schwab account. Don't give me this malarkey, oh, what age are they, or where are they in their life, and all that baloney. Lizanne, they're up to their eyeballs in cash. What is the Sonders process to lighten up on cash?
Well, but Tom, I am going to push back on that because it's not just age, but it's risk tolerance, it's need for income. What is sort of the purpose of your portfolio? For some people, earning 5% on cash, that's perfectly comfortable for them if they're income oriented, if they've already saved their nest egg and they don't want to lose any of the principal associated with it. But for investors that have a higher risk tolerance, it does go back to those disciplines. It's dollar cost averaging, it's use factor screening. There's still too much focus on monolithic decision making at the sector level, at the index level,
right,
at the style level.
Which factor matters now? Which factor into July matters?
Strength of balance sheet.
Really?
Profitability. Yeah, if you look at, Goldman has the strong balance sheet, weak balance sheet indexes on Bloomberg. A huge performance spread in favor of strong balance sheet. Within the Russell 2000, the non-profitable companies over the past year are down 13%. The profitable companies are up 7%. That's a 20 percentage point difference. Interest coverage, which really matters if yields stay sticky on the high side, if we don't have a Fed that's imminently looking to start to ease policy. So those would be three of the top ones I think you want to focus on, and apply that across the spectrum of sectors, not just in the aggregate, but that can be applied within individual sectors as well.
Ann Sonders, thank you so much for joining us on this Friday. I hope you get out to see Robert Plant and Alison Krauss as they tour the nation. She is with Schwab. We are thrilled to have how many of the pros that listen to us to Global Wall Street here on YouTube and on Apple CarPlay and Android. And after Lindsay Pieg's earlier, Paul, this next guest, he was my Economist of 2023. He carried the optimist flag in a time of gloom. And it's great to have Neil Dutta with us here from Renaissance Macro.
Neil Dutta, head of U.S. Economic Research at Renaissance Macro Research, joins us here right now. Neil, what did you take away from the labor data that we saw today? How's the U.S. labor market?
Well, I think the U.S. labor market is cooling. I mean, I don't really think there's any doubt about that. Ultimately, jobs growth is moderating. Over the last 3 months, we've seen payrolls climb about 177,000 per month. That's a clear step down from where we were several months ago. And the unemployment is up 3 months in a row. So I don't really think it's a close call. I mean, the trade-offs for the Fed have shifted, and now they have to ask themselves, you either want a soft landing or you want to let this experiment and all this sort of nonsensical rhetoric about how we have time and we can think about what we need to do next. You can let that experiment play out and then reap the consequences. So I think they really do need to get on with it. I don't think it's really that difficult of a decision to make. Labor markets are thawing. Unemployment is up. What do you think is going to happen to wages and inflation in that environment?
So is this Fed, Neil, behind the curve? Has it been behind the curve? What do they need to do, and when do they need to do it?
Well, look, I mean, I'm one of those, people that actually thought the Fed should have gone in March. Obviously, the first quarter inflation data didn't allow them to do so. But, ultimately, the story for the year is that the trade-offs are shifting. Last year, it was all about inflationary boom-like dynamics. There's just simply no way the Fed should or could even think about cutting in that environment. But this year, things have changed. Ultimately, the economy is growing, maybe 2%. For the first half of the year. If you look at total hours worked over the last 6 months, it rose about 1%. So if you assume around 1% productivity growth, you're looking at about a 2% economy. And I think what's important is that the unemployment rate is rising. So even though we've been growing 2%, it hasn't been enough to keep the unemployment rate from going up. And that means you're basically growing below potential. And at the same time, the momentum for inflation is lower, right? I mean, we're seeing that come out in the data. It's really about balance of risk. Tell me, what is the right tail for GDP growth? It's really hard to come up with. The unemployment has already been rising. That means the risk is that it keeps rising.
Right.
Similarly, with inflation has been moderating. If there's no right tail for growth, it makes it more challenging to come up with why inflation starts to perk for no reason. So, I think it's really about balance of risks, and risk of unemployment higher, risk of core inflation lower.
Right.
It's time to get on with it.
Neil, when I look at this, folks, I got futures up 1. I got a fractional move, NASDAQ 100 up a little bit too. Neil Dutta, John Williams was out in the last 72 hours saying our start is still lower, where he had it originally. The people are wrong, looking for a reset of our start and inflation to a higher level. Is this a Fed that isn't moving in a Dutta-like way because they are wedded to a Greenspan measured approach? Once they start, they got to keep it going. Why can't they, a la ECB Lagarde, do one and done?
That's a great question. I mean, I think obviously the Fed is much more of a consensus building institution than some of these other central banks. You look at some of the G10 central banks. I mean, there's always dissents at some of these meetings. You don't really get that with the Fed, so maybe that's one reason why there's more of a go slow approach. I mean, if you have these sort of residual hawks that are out there, making a lot of noise at the July FOMC meeting, I think the most obvious compromise is that they basically used the July meeting to set up a cut in September. So you make a very strong signal that a cut is coming. I think that would be one. If they don't cut in July, I mean, I think that would be the most obvious compromise. The Williams bit is interesting. I mean, on the one hand, I mean, you have to take what he says about neutral with some grain of salt, right? Because he's got a lot of his academic work invested in the idea that neutral hasn't gone up at all. But at the same time, to the extent that he believes that, it means that he believes the Fed is running a very, very restrictive policy, right? If you think neutral is that low, that means you think that you're running a very restrictive policy. And if the Fed is running a very restrictive policy, they should be far more concerned about downside risk to GDP growth than upside risk to inflation. And with data like this, they should be stepping in a bit sooner.
I got 30 seconds. What's your run rate on GDP 12 months forward or to the end of the year? Are you sub 2%?
I mean, I think 1.5% to 2% is a reasonable range. Like I said, if the Fed wants the soft landing, they know what they need to do. If they want to wait around for inflation to get closer to 2% before doing so, they may actually end up going a lot more than just a simple recalibration of monetary policy.
Your sport. Thank you so much for joining us, Neil Dutta, here on Jobs Day and Short Notice. Folks, I'll tell you, to get Lindsay Piegza, Ann Sonders, and Neil Dutta all together on a Friday after the 4th of July, we are honored. And thank you to Eric and our team. The interns came in today. Did you see that?
I saw that.
I don't think they're sober, but they came in. That was, good. What are you laughing about over there? Okay, we got to go to something serious here. This is from The Fisherman. I read it when I'm on the deck, Atlantic Highlands, and I've got my lobster and avocado. I read The Fisherman. It's a great, it's like how you know what's going on in New Jersey fishing. Makos prefer water temperatures between 64 to 70 degrees, which means, Paul, we're there this weekend, right?
Yeah, just got my little blurb from my friends at the Jersey Shore. Ocean temperatures this morning, 64 degrees. That's a little chilly. I like to see a 7 handle, but we'll do our best.
Yeah, the floaties, they don't work the same under 60 degrees. Do you have like lifeguards where you are?
Yes, we do.
You have paid lifeguards that are
absolutely they're every day.
And are they looking for sharks? Like, do they have binoculars?
We got a lot of dolphins though. I mean, every day.
Even whale.
We got whales. We got whales. Dolphins and whales. So, to this point, no sharks, as far as I can tell.
Okay, because I was reading the Nature Conservancy, and New Jersey is a breeding ground for lots of smaller sharks.
Then they can go and
cute sharks.
Yeah, they all go up to Cape Cod apparently.
Yeah, they do apparently.
Yeah. That's tough up there. You can't swim up there anymore.
No, you can't. Chatham up to Nauset is when you're a parent.
Yep. See what happens when you start conserving the seals.
Yeah, it happened in California.
And then,
this is a huge issue.
Yeah.
We made a better biome, and oops, the sharks show up to look at the otters. And
so I pay for this big house in Chatham on Cape Cod, and I can't go in the ocean.
Yeah, well, that's, it's sport to say the least. That's a little bit of July 5th talk there. It's an interlude here as we look at the British elections, the jobs report, up to the French elections. We're playing British music today for Prime Minister Starmer. Stones appropriate. Stay with us another hour of Bloomberg Surveillance.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Are these stocks under-owned by institutional Wall Street?
A lot of these companies talking about generative AI.
With Lisa Mateo on markets.
Investors just worried about the ongoing sales slump in China.
And Michael Barr with news.
A ship traveling through the southern Red Sea has been attacked.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney on a jobs day. Surprise, huge negative revision moves markets. Equity markets up fractionally from a red on the screen before the jobs report. But the bond market speaks with a 2-year in 7 basis points, 10-year in 5 basis points. Even the real yield, the 10-year real yield migrates back down to the bottom of its range, 2.04%. Anna Long, Paul, looks like a genius.
Sure does. She's been so good for so long. She's been talking about this cooling job market here. And Tom, you mentioned the revisions, the 2-month payroll net revisions, negative 111,000. The prior month was negative 15,000. So big pickup in some of those revisions. So you have to take in the 206,000 we got this month, kind of in context with that. Those
to ride out to what we're going to see Monday, and of course every shop is going to be writing weekly prospects. JP Morgan, I'm sure they'll do that tonight. It's 7:30, but adapt and adjust, and we engaged the debate in the last half hour with Lindsay Piegza really saying this Fed needs evidence. One data point's not going to do it. Right. And Neil Dutta saying, okay, this is great. Let's go. Let's get started.
Exactly. So that's kind of the bid and the ask in the marketplace here as to what this Federal Reserve will do and when will they do it. September, still on the table, I guess, but we'll have to see.
Terrific 9 o'clock hour coming up. Joining us in a bit here, Joe Matthew from Balance of Power with Robert Costa, of course, of CBS and Face the Nation. In the Interactive Broker Studio, let's get right to the Bloomberg Business Flash. Lisa Mateo.
And we've got green on the screen. Just a slight lift right now. NASDAQ futures up 11 points. Dow futures up 24 points. We have S&P futures up nearly a point. This all after jobs data showed U.S. hiring moderated in June. Prior months were revised lower, and that's really boosting those hopes that the Fed will begin cutting interest rates in the coming months. A quick look at the numbers. Non-farm payrolls rose by 206,000 last month. Job growth in the prior 2 months revised down by 111,000. The unemployment rate rose to 4.1%. Average hourly earnings cooled. You're seeing a difference in the bond market. We'll take you there. We have the 2-year yield 4.64%, down 6 basis points. The 10-year yield at 4.31%, and that's down 4 basis points. Company news, the parent of Saks Fifth Avenue, that's HBC, it sealed a $2.65 billion deal to buy rival Neiman Marcus. Amazon taking a minority stake in the new company that's going to be called Saks Global. We have Neiman Marcus Group up about 1%. Macy's up more than 7%. The Wall Street Journal reporting Arc House Management, Brigade Capital Management raised their buyout offer to about $6.9 billion. That is your Bloomberg Business Flash. Tom and Paul.
Lisa Mateo, thank you so much. Paul Sweeney and Tom Keene here. Right now, we're going to do a lot of economic talk in the hour about where is the Fed going and that. Bob, help me here. How are we set up right now? Please. Joining us right now, Joe Matthew will be with us with Balance of Power in a moment. And joining us right now, it's pretty good when your first book out with Bob Woodward, Payroll, launches at #1 in the New York Times bestseller. Robert Costa, of course, legendary at the Washington Post, has wandered over to any number of jobs and, of course, joins us now this morning with CBS and Face the Nation. Robert Costa, within the frenzy in your world right now, you are a calm voice. Who are you listening to into the weekend? Which kind of source are you listening to?
I'm listening to people who really know President Biden, not just top Democrats, not just House Democrats and Senate Democrats who are on the outer perimeter of Biden's circle. People who really know this guy who was elected to the Senate in 1972, who has been through public humiliation and public loss for a long time. And they're telling me behind the scenes that he wants to stay in this race. He's telling people close to him and family members he's adamant he should be the nominee, and he's best positioned to beat Trump. But that doesn't mean it's quieting Democrats.
You're the only one I could say this to. I mean, when he was in high school, prep school, Costa was booking the beautiful people of Hollywood to play his prep school. I mean, he's on a first-name basis.
Very good.
It's 16 with Maroon 5. What is that about? Robert Costa on the Democratic Party donor class. Who are these guys, to take it from Butch Cassidy?
Well, you have people like Jeffrey Katzenberg around President Biden, Hollywood moguls. They just had the big Hollywood fundraiser for Biden a few weeks ago. And they're so motivated, not by putting Biden in the presidency again, but by stopping Trump. And that dynamic has to be noted as this all plows ahead in the days to come, because it's really about stopping Trump for a lot of these donors and Democrats, not giving Biden a second term. And that's so different than past presidential cycles.
And so, Robert, how do you guys set this up for Face the Nation this Sunday morning on the CBS television network?
So I'm lucky enough to be guest anchor this weekend, and we're going to talk to Jim Clyburn. And I think he's really important because he actually has political capital. A lot of people claim to have political capital. He actually has it. He made Biden the nominee in 20 with his endorsement. Where is he going to stand? Parse his words carefully and listen to what he has to say. What's notable is that Clyburn's been talking publicly about maybe backing Vice President Harris if Biden steps away. Does Clyburn start to really escalate that talk or not? We also have Senator Bernie Sanders. What's he going to do if Biden steps away? He's always wanted the presidency. He's 82. Does he run? Does he back Harris? Where does the progressive, the left wing, do they stick with the Biden pick or the Harris pick or not?
Right.
We're in a very fluid and fragile moment.
I mean, Robert Costa, I can see you doing a Dan Rather imitation on the floor in Chicago, like 1968. I mean, how close are we, Robert Costa, within CBS reporting to not the certitude of a migration from the president to the vice president, but an actual cohesive debate or sets of dialogue to get to a selection choice for president and vice president in Chicago?
What's stunning to me is how this kind of corporate culture has fallen over the Democratic Party, that so few people want to take any kind of risk publicly. And politics used to be about risk. As you noted, you had conventions that were rough and tumble. People wanted power. You had to fight for it. Democrats are averse, it seems, to political war. And at this point, it seems like Harris would be the logical choice for a lot of them to avoid it. They would think maybe she loses, maybe she wins, but they would look ahead to 2028. But look, in presidential politics, I've only covered it for 15 years. You only have one shot most of the time. And this is a rare opening for somebody maybe to step into the vacuum. So I expect somebody to maybe give Harris a run.
Interesting. Rob, this is great. Robert Costa, thank you so much. In for Margaret Brennan. Face the Nation, Sunday, 2 p.m. in New York, Washington. Bloomberg 1061, Boston, Newbury Report. On radio, Sunday at 2 on Bloomberg Radio. We now turn to someone, Costa's a young buck, 15 years in. Yeah. Flip the numbers. Joe Matthews has been doing this for 51 years and joins us with Balance of Power as well. Joe, I'm sure you remember, as I remember, a given election in the cold and slush, maybe it was a primary. I think it was William Weld, Ted Kennedy in Boston. I can't remember, but it was rough and tumble politics. People were swearing at Durgan Park, trying to get a dinner. And I mean, it was the way it used to be. And a lot of idiots like me want the romance of 1968 or rough and tumble Tip O'Neill politics of Boston. Am I delusional to look forward to that?
We all do. Every 4 years, what a contested convention is like Christmas morning for a political reporter, and then it never happens. I will remind you, they've now auctioned off all of the restaurant equipment from Durgan Park. It doesn't exist anymore, and I don't know if there's a high rent condo there or something now, but much like the politics you describe, I'm not sure they're going to recreate it. And there's a real worry that if that's where we're going here, that this will be so disruptive that it's exactly what Donald Trump is hoping for. But I don't know. They've set up a week-long obstacle course for Joe Biden, and let's see if he can clear it.
I mean, what's important here to understand, I get a surveillance correction here. Joe Matthew never darkened the door at Durgan Park. He was over at Lockover having the chilled oyster soup under a portrait that made you blush when you were 10 years old. Paul.
Hey, Joe.
You can't get corned beef at Lockover.
That would be true.
Joe, what's the realistic time frame here for President Biden to make a decision here? How do we think about that?
It's a great question. They seem to have carved out a week. It starts today with the interview being deemed as the most important interview of his political life. And boy, that's going to be interesting. I'm really curious to see how much time he commits to this, if it's 15 minutes or if it's 45 minutes. That's going to tell us a lot. But he's going to be speaking in Wisconsin, albeit with a teleprompter. He's got NATO next week. He's got a trip to Philadelphia as well. But NATO, I want to just go ahead past the interview today. Think about the stakes of that solo news conference he's going to hold to conclude NATO. That's not a bilateral. He's not going to have Volodymyr Zelensky sitting next to him. It's not going to be 2-2 for the reporters. This is the big one. This is the big slog. He's never done this East Room primetime news conference thing that his predecessors were pretty good at. And so is he going to be able to take the Skip Gates question 45 minutes into that exercise? Because they're going to be throwing curveballs at him in real time. He's going to be tired after all the meetings. And I'm thinking next week, that news conference is the most important thing on his schedule.
Are the Democrats, to the extent that he does decide to step back here, is there a accepted process from where the party would go from there? Or is it, we haven't gotten to that point yet?
No. We haven't gotten to that point, but I do find it interesting that over the past couple of days, the narrative has really turned us back to Kamala Harris and away from this idea of Gretchen Whitmer or Gavin Newsom or somebody popping in. Look, there's a reason why she's there. There's a reason why he picked her, and I don't think you're going to find a lot of people who want to run against, frankly, somebody who could make history as the first black female president. If you're teeing up yourself for 28, you're not running against her now.
Joe, quickly here, do you observe any polls? I mean, let's be clear here, folks. Matthew's encyclopedic on this. Are there polls that support Vice President Harris becoming President Harris?
Well, look, her favorability rating in our own Bloomberg swing state poll with Morning Consult was on the rise and, in fact, higher than Joe Biden's in the last turn. But CNN ran numbers and found her in a statistical tie with Donald Trump. We all say that Joe Biden might be the only person who can beat him. This challenges that, and she's stronger than Biden with women and with independents. Imagine a ticket where she's got maybe a Democratic governor like a Shapiro or a Roy Cooper with her, and she's got the mantle of abortion, the moral clarity on that issue, and potentially could make history as the first black female president. That's a story that Democrats can get their heads around. Throwing all the pieces up in the air and doing a mini primary like they're talking about, a series of 5 debates with people who have no name recognition, sounds dangerous.
Joe Matthew, thank you so much. Balance of power. That's what this is about, folks. Robert Costa, Joe Matthew, back to back. I mean, that's the way we roll here. Thanks to our team. I had nothing to do with that. They just invented it out of thin air. It's incredible how they do
Once
that.
in a while they pull one.
What do I do with the stock market? Are like 12 people trading? I mean, why are we open today, for starters?
Great point.
Let the staff go home.
Exactly. But, we got the S&P absolutely unched on the day. The Dow's up 23 points. The NASDAQ's up about 10 points.
Do we close early? Like, does the market open at 9:30 and close at 9:35?
We did that on Wednesday.
We did that on Wednesday.
Yeah, that was fun. I don't know. I think we might have a full day of trading.
It's a regular day, Ari.
Yeah.
Yeah, okay.
That's all right. We're going to be here. Bloomberg's going to be here all the way through, so don't worry about it.
Bond market, it's open. I mean, it's trading 2.03 in the 10-year real yield. I'm looking at the 10-year nominal yield in 5 basis points. It comes in demonstrably. The 2-year yield is Sweeney yield, 4.63%. It comes in demonstrably. That's Gartman talk. I'm doing it. I'm not going to quote yen and gold. I mean, what a trade that's been for Dennis Gartman. Dollar weaker, as you would expect.
We need to quote, Tom.
What?
Bitcoin. Off 5%. We're down to 55,000
Thank you.
Bitcoin.
We'll talk about that here. I'm glad you bring. I don't never look at that. Sweeney's every 5 minutes he's getting a quote. Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by IBKR. Financial advisors switch to Interactive Brokers for lowest cost, global trading, and turnkey custody solutions. No ticket charges, no conflicts of your interest at ibkr.com/RIA. All right, little movement in futures right now. We have NASDAQ futures, little change, but up about 10 points. Dow futures up about 22 points. S&P futures, they're little changed as well. This after key jobs added showed U.S. payroll growth slowed. The jobless rate ticked up to 4.1%. Average hourly earnings cooled. Right now we go to the bond market. That's where we're seeing a change. 4.64%. That's the 2-year yield. Down about 6 basis points. The yield on the 10-year 4.32%. That's down 4 basis points. Commodities, we have spot gold higher, $2,375 an ounce. Brent crude, $87 a barrel. WTI crude at $84 a barrel. To company news, Elon Musk's social media platform X, well, it could be hit with a fine from the EU of 6% of its revenue. Now, sources saying set to be served with a formal warning for failing to curb dangerous content. Then you have General Motors pay nearly $146 million in penalties to the federal government because almost 6 million of its older vehicles emit excess carbon dioxide. Their shares are little changed. And sticking with cars, data from J.D. Power shows the average price for a new vehicle on track to drop in 2024 for the first time in more than a decade. But the Wall Street Journal says buyers not seeing it because those higher interest rates keeping their payments higher. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. I mean, the YouTube chat. I mean, I don't know where to go with this. Paul, I'm going to bring this up. Just, Holger Schmieding is going to want to hear this. Mary, thank you. How about Jamie Dimon on the ticket for the sake of the country? That's not me, folks.
Seen that before.
That's out on YouTube.
I've seen that
Is
before.
that really percolating?
I've seen that. I absolutely have. Wouldn't that be interesting? This could go a million different ways here, Tom. I think, the next few weeks going into the convention are going to be...
So we could have a Jamie Dimon, Jane Fraser ticket? Wait, she's Scottish. I don't think she can do it. Okay, thank you out on YouTube live chat. Greatly appreciate that as well. The last time, we're going to do the U.S. economy here in a bit, but right now, one more shot on the trilemma of a UK election, ancient history, a French election Sunday, and an America turned upside down. He was riveting the last time he was in our studios, and we are so honored that Holger Schmieding could join us this morning. He's with Berenberg Bank, but a huge perspective on the economic politics of his EU. Holger Schmieding, how will Brussels, for that matter, how will Paris, in a fractured nation looking for a Sunday election, how will they study, interpret, accept the United Kingdom election?
Well, the UK election, of course, for Europe is a bit of a relief. The Brexiteers, who caused a lot of trouble and caused significant damage to the UK economy, are out of power. That is good. The UK will, of course, not return into the common market. The UK is not going to have anything like a debate about rejoining the EU, far too divisive. But the EU can now look forward to pragmatic relations with a good friend across the channel. And, well, what we have seen in the UK, namely a turn towards the moderate center left, is not a bad thing by European standards.
And Holger, I mean, I think that's, I guess, the hope and expectation of a lot of observers here, given what's happened with this UK election. To what extent do you believe that Europe is open to any type of rapprochement in terms of some of these economic policies?
Well, Europe is open to a pragmatic handling of things, but Europe is, of course, not open to any approach as to the UK drawing very close to the common market. There is no cherry picking. But when it comes, say, to the exact amount of paperwork that needs to be filled in for goods to cross the border, on these things, when it's about the alignment of standards here and there, the EU may take a bit of a more pragmatic approach with a Labour government that is not to blame for the Brexit mess, rather than the EU was willing to versus a Conservative government that basically was responsible for the Brexit mess.
And Dr. Sweeney, in the constricted time that we have, what is the Berenberg Bank real GDP growth, the annual real GDP growth forward of all these contested areas, the United Kingdom, France, a staggering Germany. What does a GDP feel like?
Well, next year, we'll probably have about 1.6 to 1.7% growth in the UK, having lost out against the continental Europe. The UK has now a bit of potential to catch up somewhat. For France, we are looking for 1.4% growth. We had cut our forecast from 1.6 to 1.4 on account of the uncertain political situation. The risk to France is clearly to the downside. For Germany, which has this fiscal straitjacket, the outlook is more for growth, just slightly above 1%. But all of Europe can look forward to a bit of an economic normalization, to more normal growth again.
I got to get this question. Paul's got like 6 questions. But with what you just said, is the outcome of what I saw on Sky and ITV and Bloomberg, Francine Lacroix and Stephanie Flanders, is this the beginning of a lesser austerity across a broader Europe?
That is a big word. In the UK, not really. There's very little fiscal space for the new government. So that would be a marginal lessening of austerity. In Germany, we have just seen the government agreeing on a budget for next year, which is half austere, but which does include a few measures, small measures, to improve growth. So what I would say, Germany, UK, marginal easing of austerity in the UK, not much in Germany. And as to France, we'll probably see some fiscal slippage under any new government after this election.
So, Holger, what is the market discounting in terms of the French election this Sunday?
The market is discounting that there will be a hung parliament, that no side will win. And in a hung parliament, the advantage is not much gets done, but not much gets broken either way. Also, but I'm afraid that the markets are a bit underappreciating the longer-term risks that come in France from the end of Macron's pro-growth reform drive. My, until recently, quite positive outlook on France has darkened now that we will likely have the right wing as the strongest party in government, the left also being more strongly represented, and no longer a majority from a pro-reform centrist middle ground.
Holger, thank you so much. Look forward to seeing you in our studios in New York City as we can. On a broader Europe, on Brussels, and on these 2 huge elections over the weekend, United Kingdom and France, Holger Schmieding. He is with Berenberg Bank. Ellen Zentner publishes with her team moments ago. They're working. Did you know that?
Yeah, sure. That's
it's not like they're moving the mouse. They're not like on the desk with the jiggle mouse thing where they're getting in trouble. This is Zentner, Coffin, Wolf, Dujan, and others. And they see core inflation here 3.5% year over year, data in line with expectations. Still the second lowest print of the year. We expect headline CPI due to negative energy inflation. I don't know. I mean, a gallon of gas is going up, right?
Yeah, I'm looking at WTI crude here, Tom, just under $83. I'm sorry, just under $84 a barrel. So we've had that move higher in underlying crude prices.
You give me a couple dollars on Brent crude, 87 now. You pop it out to 89 or 90.
Yep.
And I'm not sure what that means for a lot of disinflationary reports.
Yeah, and the rent has been a big issue there, and housing costs, and it's been such an inflationary driver that but have we seen peak there, and could that offer some relief?
I get huge cross currents now on real estate. Lisa, what are you seeing on real estate? I mean,
as far as real estate?
Yeah.
I don't know. I just know because I was searching for a home, and now that's put on hold because the competition got too fierce. People paying cash. Yeah. I'm competing against like 20 offers in writing. I mean, it's...
What I see is people way over the market, and there's no bids. And anybody that's even remotely close to intelligent, just like you say, 20 people show up.
Yeah.
Nationwide.
Even with mortgage rates still right around 7%.
What do you see in Arizona? You're looking at 6,000 square feet in Scottsville. Scottsdale,
some of those markets have actually overheated and started coming back down. You think about some of the Nashvilles, the Austins, some markets in South Florida. We've heard some of the real estate folks saying those things are starting to cool off.
We got a mystery guest coming up. I love telling her. Julia's a mystery guest. We have a mystery guest coming up in the next hour on the fabric of the American labor economy. Red and green on the screen. Stay with us from New York City, Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
In the Bloomberg Interactive Broker Studio, I'm Lisa Mateo alongside Tom Keene and Paul Sweeney with your opening bell report. So how are the markets going to react to the latest jobs data? It showed U.S. hiring wage growth stepped down in June. Jobless rate rose to the highest level since late 2021. Well, a quick look at the numbers. Non-farm payrolls rose by 206,000 last month. Job growth in the prior 2 months, that was revised down. All right, we're just getting started, so let's take a look at the numbers right now. We have the S&P 500, little change, up about 2 points at 5,539. We have the Dow, little change, down about 8 points at 39,296. We have the NASDAQ, little changed, up about 9 points at 18,199. We go to the two-year yield, 4.63%. That's down 7 basis points. The yield on the 10-year, 4.29%, and that's down 6 basis points. At the open, want to check in with Tesla shares, up about 2%, putting the stock on track to turn positive for 2024. And finally, also checking in with the chat. Tom, your wardrobe, the talk of the morning. They are loving the tan suit.
Yeah.
Did Mrs. Keene pick this out? Was this your choice?
No, John Farrow picked this out.
He hates tan suits.
He's like in Amalfi or something. He said, go with the tan suit. It's the one day of the year.
There you go.
Yeah, Summer Friday.
That's it. That's your Bloomberg Business Flash.
I hate, Lisa, thank you. I hate talking to Julia Pollack because I go to ZipRecruiter and, you know, my job is on ZipRecruiter. You know, I can't believe this. Needed. Has to work 7 days a week, keeping up with the zeitgeist. Apply. Sparta.
Yeah.
Bloomberg Radio.
There you go. ZipRecruiter. That's where the kids go.
$18 an hour. Okay. It's good to see my job in jeopardy out on ZipRecruiter. It's Julia Pollack's loss, or fault, I should say. She joins us now. Julia, what do you learn from your acclaimed website at ZipRecruiter? How does that add to your economics?
So it captures billions of interactions between employers and job seekers, and it gives us much more granular real-time data than the government does.
So what's changed?
Well, you know, in May, I told you I was expecting a really hot report because our marketplace was jumping. And in June, we actually saw 4 straight weeks of declines in job openings. We saw our measure of sentiment, job seeker confidence index, fall to the lowest level since the start of that survey. And then external data points kind of backed us up. You know, the industrial part of the economy has been weak for ages, but the service sector fell into contraction according to the ISM PMI, the Purchasing Managers Index. And this report kind of seems consistent with that. We saw bars and restaurants shed over 3,000 jobs. And professional business services also shed jobs at a time when college grads are flooding the market.
So what's the new run rate? Paul, you've asked this a bunch of times. Julia Pollack, what's the new run rate on non-farm payrolls? Sub 100,000?
Well, you know, we saw the labor force expand by more than 200,000 here in this report, which suggests that you need to be adding more than 200,000 jobs or else unemployment is going to keep ticking upwards. So yes, you know, due to demographics and long-term projections, people thought that only 100 to 150,000 jobs a month would be necessary. But given immigration, given how many people are coming into the labor force, we actually need more jobs than that, or else we'll see what we've been seeing the past few months, a gradual uptick in unemployment.
So let's go to that unemployment rate. Some people are going to really focus on that, Julia. We came in at 4.1% versus 4% last period. What does that headline number mean to you?
Well, it's the highest number since November 2021, and it ends the era of unemployment being 4% or less. And that 4% is kind of thought of as a magical number in the economy. Below that number, we see labor markets get sufficiently tight that employers have to cast a very wide net, reduce hiring requirements, raise wages, roll out the red carpet, and bring more people in.
And Paul, I went to Mike McKee, of course, who's the real authority here, and he said the SOM rule is 4.4-ish percent. We're nowhere near the gloom that Claudia Sahm. Did you see Claudia Sahm with the cats she has? She would feed Larry the cat.
She would.
In front of Downing Street. Claudia Sahm would have been there.
Hopefully
Continue with Julie.
Hopefully Larry was led in here. Julia, what do you see on your site, when you go out there and really look at the data, who's hiring, who's not hiring, that had been hiring? How are things changing out there?
So we're seeing about the same number of government postings as we did for months and months and months. But what's changed is that those postings are now getting filled. So early in the pandemic recovery, the public sector just could not compete with the private sector. That's changed. We're seeing weakness in the private sector, especially in white-collar industries. And we're seeing healthcare and the government consistently, month after month, be extremely strong. So the government has added about 600,000 payrolls over the past year. The healthcare sector, about 750,000. Those are really the engines of job growth right now.
Talk to us about, I guess, immigration, legal and illegal. How is that impacting the workforce? Some folks are trying to say, hey, these folks streaming in on the southern border, they're getting jobs, they're spending money, they're contributing to the economy. How do you guys figure that into your numbers?
Sure. And so, we should be at a point where labor force participation is declining because we've actually hit peak 65. This is the year that the largest number of Americans are turning 65. For the next 4 years, we should see peak retirements. And so we actually should see negative payrolls, perhaps. The reason we haven't seen that is because over the past year, about 3 million immigrants have come in rather than 1 million projected. So it's a large number of people. Most immigrants have a very high propensity to work, and they do two things. They're a supply of labor, which is great for many businesses. They're also they also demand for goods and services, which could push up further demand for employers. So most studies find that immigration is a net positive for the economy. That said, it's going to be decades before we have robust analyses of the current immigration policies, which may be different given the mix of immigrants coming in and employers' reactions to them and the policy sort of.
Where do you stand on the debate? And good morning, Dr. Wong, Anna Wong. She's in Hong Kong, I think, is why we haven't heard from her. It's on the other side of the far side of the world. Yep. But Julia Pollack, where are you on the trend now of 100,000 2-month revision? Is this finally clicking in the revisions that not all but selected economists have talked about, which show that we've been faked out by a robust job economy?
I mean, even with the revisions, these are still pretty strong numbers, over 200,000 the past 2 months, even before this report. It's very, very difficult to do this kind of statistical work in real time. Companies take forever to fill out these surveys. So I don't think there are any shenanigans going on. I wouldn't accuse the BLS of anything like that. I think it's probably the most technocratic and apolitical agency in government. And they do a better job than any other country's statistical agency by far.
Julie, I got to throw you an audible. You got a massive heat wave in California. Like you have the mother of all, Bakersfield up to Sacramento, scary heat wave going on. How does that affect agriculture? Any idea? Does that slam into a drought that affects our produce coming out of the Imperial Valley?
So my kid is in a touring baseball team. So we've spent one weekend after another touring the state and in places with temperatures that I, living on the coast, never see. I've been playing baseball games at 106-degree temperatures. And yes, we definitely saw during our time there, farmers covering fields with sheets of plastic and irrigating them as much as they could. Let's hope that those kinds of measures go far enough. But of course, this is a huge productivity challenge for the state.
This is well said. This is perfectly timed, Julie, because we bring in surveillance. Where in God's name are we traveling to this weekend? Correspondent Lisa Mateo. I mean, Lisa, totally commiserate with Julia here about women on the road in the weekend on baseball. Lisa, it's torture.
It is. I'm on the softball schedule. I know you're on the baseball schedule, but this weekend I think we're upstate New York, Binghamton, New York, maybe. But my tan lines are the worst ever. Is it the same for you? I mean, you're out there on these fields all day. It's crazy, but we do it for the kids, right?
think it's been the best experience. What a nice mother-son bonding experience.
Oh,
there
wouldn't
you
give it up for the world.
Oh, this is great. This is like the high point of the year. Julia Pollock, Lisa Mateo.
Exactly. On the road.
On
taking
the
kids
road.
on these travel.
It's like hockey road trips.
Oh, man, those are
Scott
the worst.
Soshnick
Yes.
used to do
Yes.
that with his son, the qualified goalie.
Where are you going this week?
Well,
Ottawa.
Allentown,
Yeah,
Pennsylvania.
exactly.
Ottawa for one game. With our news in New York City on Jobs Day, Michael Barr.
Thank you very much. On the air-conditioned beer tour, British Prime Minister Keir Starmer says he will lead a government of service on a mission of national renewal in his first official remarks after his Labour Party swept into power in a landslide victory after more than a decade in opposition. Starmer led his party back to government less than 5 years after it suffered the worst defeat in almost a century. Starmer, who spoke in front of 10 Downing Street today.
When the gap between the sacrifices made by people and the service they receive from politicians grows this big, it leads to a weariness in the heart of a nation, a draining away of the hope, the spirit, the belief in a better future, that we need to move forward together.
Meanwhile, Conservative leader Rishi Sunak, in a farewell address, said he understood voters' anger and took responsibility for the loss. President Joe Biden is embarking on the most consequential several days of his political career, knowing that he must restore the faith of voters, donors, and party officials. The president, who has spent the week since his disastrous debate performance, will be heading to two must-win swing states, Wisconsin and Pennsylvania. But most crucial for Biden will be an interview tonight with ABC News, offering voters and allies the first unscripted, high-pressure look at the president since he faltered in his debate showdown with former President Donald Trump. Firefighters in Northern California battling wildfires in a potentially historic heat wave. Captain Robert Foxworthy of CAL FIRE spoke about the major challenges with triple-digit temperatures.
Obviously, having those high temperatures are tough on the body, and it just kind of changes our strategy a little bit on how we operate.
A new wildfire is burning outside of Modesto. It's forcing evacuations in Mariposa County. Global news 24 hours a day and whenever you want it. With Bloomberg News Now, I'm Michael Barr. This is Bloomberg Tom Paul.
Can we
Lisa.
massively audible?
Yeah.
Matt
why not?
Miller, I think Wednesday, I got to lose track of the days, in conversation with Pierre Gasly of F1.
Right.
Like he's like the heartthrob. I mean, he walks down, like at Milan, at Monaco, he walks down the thing and like 40 women faint. You know, he just got a fine. I have no idea what I'm talking about. Article 42.3D of the sporting regulations, because they changed his engine at the British Grand Prix this week, and he starts in last place.
Oh, you can't.
Because he
come
changed the
back from
spark plugs on the car.
Well, but see,
he used Champion and not AC spark plugs.
You have to. There are rules. You just can't like make an engine part change or whatever. You can't do that. That's racing. It doesn't make a difference whether it's F1
or
whether
Indy
it's in
or whatever.
NASCAR.
There's
Indy.
rules.
There are rules to that.
Yeah.
I'm sorry.
British Grand. Maybe that's where Farrow is. Do you think he went to Silverstone?
He could be.
I think so. I mean, I could see it. Matt Miller with Pierre Gasly. Look for that interview. Mr. Gasly re-signing. I hope I have this right. Re-signing with Alpine, which is really Renault, but becomes, Renault. Okay, that's from a few years ago.
That's Renault.
And becomes Audi, I think, in 18 months.
No idea.
I have no idea.
Where are they racing?
This is in the British.
Oh,
They go to the motherland.
Farrow could be there. Who
Where
knows?
McLaren, and there's
How do you spell this name? I have to Google this
GASL. Right. This guy's.
The ladies like him.
The Rock Lisa couldn't get in the car. Let's start with that. The Rock couldn't fit in the car. But these itty bitty drivers, they're all heartthrobs. I mean, and Pierre Gasly, he goes, oh mon Dieu, and the women,
Well, women faint when they see me, but that's
They
more
do.
like burning with fire or something, man. Whatever.
Matt Miller with Pierre Gasly here a few days ago. Look for that out on Bloomberg Digital. Green on the screen, tape doing better than futures. From New York, Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Treasury yields shrink after the latest jobs report fueled those bets that the Fed will cut interest rates this year. We have the 2-year yield 4.64%, down 6 basis points. The 10-year yield 4.31%, and that's down about 5 basis points. We go over to the stocks. We have the Nasdaq up about 0.1%, 17 points. The Dow little change, up about a point, and the S&P 500 little change, down about 2 points. Currencies right now: we have the dollar weaker, Japanese yen, euro, British pound stronger. British pound at 1.2808 against the dollar. Have to point out Bitcoin sinking for a 4th session in a row. Bitcoin down 4% at about 55,000. Check in with a few crypto-related stocks. So we have Coinbase down 6%. Same for MicroStrategy. Marathon Digital also down 6%. Moving the markets, Macy's. The Wall Street Journal says Ark House Management, Brigade Capital Management raised their buyout offer. So right now, Macy's up about 11%. What's also on the rise? Prices this summer in the Hamptons. Shocker. Wall Street Journal points to a lot of social media posts of folks complaining about paying $30 for berries, $120 for lobster salad.
I mean, the $120 for lobster salad as the trend continues, but what do you get? $30 for a little bowl?
A little bowl of berries.
A little bowl of berries.
Crazy.
Like, is there like a liqueur?
I can go to the farmer's market and get it for $2.
You get a shot of creme de menthe on top of it or something. We use the Bloomberg Professional Service here to do lots of fancy math and derivative finance. 600 divided by 58. So in 10 minutes, if you have 58 hot dogs, I can go to 3 decimal points and go 10.344 seconds per dog, Michael Barr.
That's
And
talent
Nathan's hot dog thing.
I once ate 2 whole fried chickens.
But
it wasn't a contest, but I just ate 2 whole fried chickens.
Thank you for the team covers there on a big New York City thing, Nathan.
Everybody's shaking their heads.
It is part of the holiday season. We're going to get to soccer here in a moment. Ira Jersey joins us on the bond market and jobs day, but we got to talk. Get a little football chatter. He won't. He'll never come on again. Ira, was this jobs report seismic for the bond world of Bloomberg Intelligence?
It wasn't seismic, but it certainly gave us some information and made September a bit more of a possibility than we originally thought it was. Those revisions were pretty, reasonably big, and certainly if you see, 100,000 lower job growth over 2 months, then when we get revisions for for this month, it could be lower as well. And I think that's one of the things the market's going to hang its hat on right now.
So what is the market kind of telling us here, Ira, this morning? I know it's a late trading day, but is the market telling us anything, given that jobs number?
Yeah, a little bit of a rally, nothing super crazy, but when you look further out, so we're concentrating on when the Fed's going to make its first cut. But for me, and for when you look at 5-year and 10-year Treasury yields, what you care more about is not when the Fed starts, but how much do they go after that, right? And how quickly, and both and what the magnitude of cuts ultimately will be. And we're basically adding in a large portion of yet another cut. So basically the terminal rate that's being priced by the market right now has gone down about 10 basis points. So, more or less half a cut being priced into the market for, again, the end of the cuts whenever those ultimately come.
For Global Wall Street, I'm going to go to 4 digits here because we're doing hot dogs to 4 digits. 2.0357 is a 10-year real yield. For Ira Jersey, where is a closing print on the 10-year real yield that says we've broken below range? Is it beneath 2%?
Yeah, it's about 1.95% for 10-year real yields. We've been in a very defined range, Tom. And when you look at something like the 10-year Treasury or the 2s, 10s yield curve, right? That's kind of the benchmark curve that a lot of us look at. We've been really in a defined 25 basis point trading range now for that curve since February, and for 10-year Treasuries really over the last 6 to 7 weeks. And I suspect that we probably stay there because the incoming information isn't much different different than what the market in general was expecting. So even real yields, while I do expect them to be lower by the end of the year, for now, I think that we're probably in a trading range for the summer. People aren't going to want to take a lot of risk one way or the other until maybe we get something more definitive out of the Fed, either at the end of this month or at the Jackson Hole Symposium.
All right, Ira, I am now officially dialed into Euros 2024. Look at the lineup today. It's almost like a World Cup Final Four. Spain, Germany. I mean, those are arguably two of the best teams in the world.
We're in the final 8. Spain, Germany, Portugal, France.
Wow.
That's Ronaldo, Mbappe, England, Switzerland. And the last one is Netherlands, Turkey. Ira, discuss.
Yeah, so I mean, obviously these are some of the best national teams in the world, and like you said, any two of those could have either easily been final. So the fact that we're here at the quarterfinal stage, getting some of the probably the really big key matchups. I think the surprise would be if Switzerland beat England, right? That would be certainly something that would crush the odds makers all over England. But England hasn't looked particularly strong on the attacking side this tournament. So you know, if it goes to penalties, that's anybody's game.
Young Pharaoh would lecture me that this is a huge deal. Is this, what's it called, Paul? The UEFA? How do you pronounce that, Ari?
It's
UEFA. Thank you, Ari.
Yeah.
The UEFA Euro Cup. Ira, is this bigger than the Olympics?
Well, certainly in the soccer world it is. So in the Olympics, you have two odd tournaments where one is on the women's side. You have full national teams, but you're only allowed to bring 18 players instead of the normal 23 or 25, like you can to a World Cup. And then on the men's side, it's an under 23 tournament. So it's similar to the teams that we have in USL League 2, where the team that I help manage plays. So it's the best, younger players as opposed to the full national team. But most countries can't bring their full slate of their best under 23s because their clubs don't release them for the Olympics a lot of times. So you sometimes don't necessarily get some of the big countries like Brazil or Argentina win that tournament.
So who are you favoring here? 8 teams, 4 games. Spain, Germany, Portugal, France today. England, Switzerland. Ira just threw England under the bus. Netherlands, Turkey. Who's your fave and who's your out-of-nowhere winner?
Well, I think that I think Netherlands probably goes through. I think just overall they're better than Turkey. It's that France should go through. I just think that they have a better attack, and Portugal's not where it used to be, particularly in the midfield. So I think that France probably goes through. But it's that Spain-Germany game I think is going to be the exciting one.
Ira, we don't want to talk to you anymore. Caroline Hyde just walked in the studio. She's more important than you. Ira Jersey, thank you so much there on a bond market moving here. 10-year yield coming in 4 basis points. There is an extravaganza here going on at 10 a.m. Paul Sweeney's here to translate it for me. And the key attribute of Danny Berger, Caroline Hyde, and Paul Sweeney is BitDog is down 15,000 from the peak.
It is? And where's Matt
Danny
Miller when you need him?
top ticked it.
Yes.
No, Danny loaded the boat on her retirement plan at 74,000. Do we have a why Bitcoin has gone from 60, 61-ish to 55?
I do not. And because we've had the equity markets holding in fairly steady, so I don't see the correlation there. Who knows? But it's more sellers than buyers. I'm sticking with that one.
Joining us now, she voted early, voted often in the United Kingdom election. Caroline Hyde joins us as we speak. Just simply, what drama, what a spectacular moment where you grew up, where your parents, your family, are they shaken by the election? Is it just another day?
The context is amazing. Just think, in the last 4 years, well, in the last 2 years alone, we've had 4 different prime ministers in the UK.
Right.
If you think back to 2019, that was a landslide Conservative Party
I got
victory.
2 questions, Bob. Why wasn't Caroline Hyde in here at 700 with that accent? I mean, it's too much to say the least. Was this Liz Truss's fault? I haven't said this to anybody else but you.
Well, Liz Truss is out, not even a member of
But
Parliament
is it her
anymore.
fault that the Conservatives in Reform cratered like they did?
I think it's every one of those 4 prime ministers' fault. And indeed, not only is the infighting within the Conservative Party a key issue, but I think also kudos to Keir Starmer, who managed to totally change the Labour Party in the last 4.5 years in opposition.
Caroline Hyde, Danny Berger, Paul Sweeney coming up here in the 10 o'clock. Just for Caroline Hyde, she said, he's in Vegas, final tour. Play some Rod Stewart.
Oh, please.